Today. How was your weekend? Hope everybody's doing well. Had a good weekend. Good morning, Thala, Dave B, Muhammad, Tony, Alan. Nice to see you guys this morning. Hope everybody had an amazing weekend full of sunshine and happiness. I know that I did. Ready to get back to work though. Guys, I always get excited. Ready to come back to work on Monday. Ready to watch the markets, look at the indicators. Last week was an interesting week, wasn't it? Um, Awful lot of patience needed last week. So good stuff. Can you guys hear me okay? Everything all right? I moved houses yesterday, so I'm kind of broadcasting from the dining room of the new house. Awesome. I'll build an office today. Don't have it yet, so I've got a little bit of an echo. Good morning, Claire. Good morning, Sophia. Nice to see you. Um, for those of you that don't know me, my name is Mark Novak. I'm going to be running this class today. The house does not have wheels. I am not that hillbilly, Ron. 5 more weeks in the Pacific Northwest. We're going to see if we can manage 2 or 3 days of sunshine in that 5 weeks. Guys, we're going to have a good time today. We're going to talk a lot about patterns. We're going to spend an awful lot of time focused on advantages. That's going to be the word of the day today, is advantages. And what you're going to find is that the more time you spend with the software, it's not that you're looking for trades. It's not that you're looking, hey, can I go long here? Can I go short here? I want you to change the language a little bit and start using the phrase, do I have the advantages I need to go long here? Do I have the advantages to go short here? And that's what we're going to talk about a lot in the first hour. The way the classroom runs, for those of you that are new, is our first 30 to 40 minutes is spent talking about one trade specifically, a high probability trend trade. And it's a trade where every indicator on every chart agrees. It gives you the opportunity to have so many advantages in place. You're going to teach yourself, well, I'm going to work with you, but you're going to get to a point to where you begin to trust these advantages. And through that trust, you'll enter trades. And then you'll just begin the awareness through patterns over and over and over again so that this trade becomes easy for you. And then from there, Nexgen users grow exponentially. Good morning, Ziba. You start focusing on one trade, and what it does is it creates your awareness for more advantages through chart reading. And that's going to be the process today. But this morning, like every morning, the first thing I do when I start drinking my cup of coffee, my first chart's loading, I like to go to forexfactory.com. I like to take a look at it, make sure, see where the news is going to be during the day. Not necessarily a concern about what the news is going to be, but more just knowing that it's there. News has the potential to make the market act a little bit erratic. It can make it jump or spike. Everything can say up and that market can go down suddenly. It can create slippage. And sometimes it just moves it too fast to really get in and out of a trade. So I'm looking for the news, and there's 3 types that we're looking for. There's medium impact. This may move the market. This is a great cue for me to go grab a bagel, toast a waffle, do something other than jumping in front of the market right when that news release comes out. And then there's the high impact, and this one is typically a market mover. For me, it's 100% hands off. I won't go near the market during high impact news. And then there's this low impact news, and being aware of it is a great thing. But I typically, if I'm already in a position, I'm up money, I don't mind putting in a protective stop because the likelihood of low impact spiking the way high impact does, it's just not the same. So each and every morning, checking news, not worrying about what it is, doesn't bother me a bit. I don't know what ISM manufacturing PMI is, but what I do know is that it may move the market. If you're one of those people that needs to know everything, no worries. Click on that little folder to the side. It'll tell you everything that you need to know about it. But that's how I get my day going, guys. I get my charts up, I check my news, and then everything that I talk about in this room comes from the tutorial section. Right here off the education page, this is going to be the rules that we discuss, guys. This is going to talk about glossary of common terms, and it's going to remind you, I'm going to remind you, that our first focus this morning is a high probability trend trade. We're going to focus on a trade that is defined when each indicator on every chart agrees for the trade. Your triggers are the strongest. There's no termination conditions that exist. There's no trouble spots between your entry and your target. And if you spend your first couple weeks focused on this one high probability trend trade that typically wins 70 to 80% of the time, what it does for you is it turns you into a chart reader. Your awareness of what the indicators are telling you is going to make it so that you can look at your indicators and understand where the market is likely to continue, where the market is likely to go, and where the market is likely to stop. And then you'll use these elements to enter a high probability trend trade. And the great thing is that if you take that small amount of time and really focus on this best of the best, your understanding of these three key elements is going to take you to where everybody wants to be. And everybody wants to be there before they're ready. So keep it simple in the first few weeks, but it's going to take you to a medium probability trade, guys. And this is when most of your indicators line up for a trade. However, a small issue exists. Your ability to read charts is going to have you recognizing these small issues. And this is ultimately going to be the vast majority of your trades. And when you're executing medium probability trades, you're going to take these trades, but you need to manage them assertively. They're not going to be as smooth and high probability, which means that it's going to take a little more chart reading, a little more management on your part to get the most out of these trades. If there's trouble in your way, you'll be taking portions of your position off at that trouble spot, getting to zero loss levels, as this is where everybody ends up, and they end up there quickly. And when we talk in the room and you guys post your charts, we talk a lot about the management to help you assertively manage these medium probability trades. But focus on that best of the best. Give me 30 days, guys. 30 days focusing on that 5-1 trend trade that happens after a termination condition. It's going to put you on a path for success. It's going to give you a skill set that's going to allow you to be successful as you study, as you grow with the software, as you work your way into those medium probability trades. And the high probability trade is really pretty simple. It's 3 rules, and it happens on 2 charts. And each rule is designed specifically to give you an advantage. And I'm going to try and use that word a lot today. Your first rule says that you need strong trigger lines. So the first rule is going to provide you the advantage of momentum. Your second rule says room to the profit targets are true. It's going to provide you the advantage of a clear path. And then your third rule is going to be using a limit order at areas, guys. You're going to pinpoint with accuracy so that you're going to have the market coming to you rather than you chasing the market. And this is going to provide you the advantage of an entry area where the market is likely to continue. When you put these 3 advantages together, you get that high probability trend trade. So I like to think of it, this is a great, it's like an equation, right? A recipe. A trade is momentum, a clear path, and an entry area. And a trade happens on 2 charts for new users. You're going to see people in this classroom posting pictures of 3 charts, of 4 charts. There's people that use 5 charts. Guys, I'm very much a keep it simple kind of guy. I believe in the KISS method. You can get what you need to read your indicators on only 2 charts. You can find a high probability trend trade on only 2 charts. And the patterns that show themselves on 1 chart show themselves on every chart. So what you're doing for that first 30 days is you're just learning to read your indicators. And for that high probability trend trade, we're going to use a 13-2 chart and we're going to use a 5-1 chart. And your 13-2 chart is a larger chart. It's a slower chart. It's very much a broad stroke of a brush. It's giving you the overall temperature of what the market is doing. So if somebody asks you, hey, is the market going up or down? You're going to look at your 13-2 and you're going to say, well, the background on the 13-2 is green. I'm in an uptrend. I'm only looking for rules to be met for high probability trend trades long. Or the background is red. The market's in a downtrend. Only looking for rules to be met for high probability trend trade short. Your 13-2 is going to allow you to continue to trade with the trend. It's also going to give you rule number 1, those strong trigger lines, making sure that you have the advantage of momentum And it's going to make sure that rule number 2 is true, that nothing's in the way, that there's room to those profit targets, no termination conditions. And that's going to give you the advantage of a clear path. Before you ever go to your entry chart, your smaller, faster chart, you're already going to have the advantages of trading with the trend, the advantage of strength and momentum, and the advantage of absolutely nothing in the way. One bar on the 13.2 gives you all this information. And when you have it, you're going to go to the 5.1. And that 5.1 chart is a smaller, faster chart, and it's really a refinement chart. You're going to take that broad stroke of the brush provided on the 13.2, and you're going to be able to pinpoint your area of entry on the 5.1. And this is where rule number 3 comes in. It says that you're going to use a limit order to buy or sell a pullback to an area inside of favorable large triggers. You are going to pinpoint that entry. You're going to wait for the market to come to you. And this is going to give you the ability to reduce your risk and maximize your profit potential. So I'm going to give you both of these pictures in the room. I love this picture. This is a picture that John Novak put together, and it really simplifies what you're looking for. It keeps it in very simple language. You'll notice that it doesn't say strong triggers, XYZ, or no termination conditions, and all of this other stuff. It's really focused, making it easy for you to recognize, making it easy for you to remain comfortable. And we use that 2-chart process because what happens in one bar on your larger chart, that single bar on the 13.2 where you're gauging momentum, where you're gauging a clear path, understanding the overall trend, there's typically 15 to 30 bars on the 5.1 chart during that one bar. So you're going to use this refinement process to pinpoint that area where the trend is likely to continue. So without further ado, let's focus on some rules. Let's make sure that we're comfortable with those advantages. As I say this every day, and I mean it from the bottom of my heart, if you have a question about one of the concepts that I'm talking about, it's okay to interrupt. Raise your hand. Say, hey, Mark, will you repeat that? Whatever you need to do to make sure that you're comfortable with this one concept. John changed my pictures up a little bit this weekend, so I'm going to take a look at it. But your large chart, your 13.2, is going to use these trigger lines first to determine trend. When the small, faster triggers cross over the large, slower triggers, the background color is going to paint green, letting you know that you're in an uptrend, that you're looking for those high probability trend trades long. The same is true when they cross below. The smaller, faster triggers cross below the larger triggers. The background will turn red. It'll change your mode of thinking. I'm no longer looking for long trades. I've lost that uptrend. Now we're in a downtrend. I'm going to look for rules to be met for shorts. And as long as those small triggers remain above the large triggers, the background will remain green and vice versa. So that's the first way that we're going to use the trigger lines. It's just going to automatically tell you whether you're in an uptrend or a downtrend. It's not something that you need to figure out on your own. But we're going to use them for odds favorable momentum. We're going to look for strong trigger lines on the 13.2. And this is your strong trigger line look. In an uptrend, those small triggers are going to be crossed up. They're going to be above the large triggers that are also crossed up. It's this space created between the small and the large triggers that let me know that the odds are favorable for the market to continue up. When they're at their widest point, you have the most momentum. As they return to the large triggers, that momentum is going away. Odds favorable momentum is very much a key phrase that you're going to hear in class. If you allow momentum to lead the way, let that 13.2 tell you that the market's likely to continue, it's going to give you great advantages. When the small triggers cross down, it means that the faster average line is slowing down, we're losing momentum. Then they cross over, we change the trend, and then once again they break away. There's that odds favorable, wide, large triggers, space between the two. These are our best looks. Your 21.3 is becoming gray background if you select tick replay. Thala, you don't need tick replay on the 21.3. You could try reloading the template if you want and see if that helps. And if not, try rebuilding a new 21.3. I had to do that on my 5.1 this morning for some reason. I was getting the gray chart and I just rebuilt a new chart and it worked out no problem at all. And then if you need help building that chart, let me give you a fish, or I'll teach you to fish here. Let me find it. Chart templates, contract roll. Sorry, things have changed just a little bit in here. I want to make sure that I can find it. There's your chart templates right there. Being able to go in and take a look at it, and then John's got all the settings highlighted for you as well. That should help you out. And then of course Jason and Tech if it gets to that point. So guys, for rule number 1 for the strong trigger lines, your 13-2 chart is going to lead the way. It's going to tell you that that market's likely to continue in the direction of the trend, and you'll be looking for trades from that point where the small triggers accelerate away from the large, all the way until they return, until we lose that momentum. And when the small triggers work their way back in, we call this a weakening of the large triggers, polar opposite of strength, right? And when we have these weaker large triggers, anything can happen up or down. The market may continue up or it may reverse. So stay focused on the absolute best of the best, on those strong triggers in an uptrend, those strong triggers in a downtrend. And as we scroll back today on your 13-2 chart, we'll go through a little historical. We're going to look for these tails or these wicks. This is going to be a study process for us. And what you're going to find is that when you get one of these black tails or wicks, we'll begin circling them. These are all potential entries for a high probability trend trade on that 13-2. So do me a favor, give me a Y in the room if you're comfortable with this first basic concept. This is the one that's going to lead the way, guys. If every trade you take has odds favorable momentum, well then you've already put yourself in a great position. You have a market with a freight train of momentum behind it. Awesome. Matt, welcome to class. Nice to have you here. Doc Luck, good to have you back. New users, remember, this is your class. And Matt, it seems weird at first. I say that a lot. Jar Jar, I see you. You guys drive this class. You guys really set the tone for what I talk about. I have zero syllabus. There's no timetable. I'll spend as much or as little time as it takes to get you guys comfortable with the concept. So we've got odds favorable momentum. We have a market where the odds are favorable for it to continue in the direction of the trend. The first part, and Matt, that 21.3, it's because I'm not sure if you heard it in the very beginning. Nope, you don't need it. So strong triggers on a 21.3 look exactly like strong triggers on a 13.2, look exactly like strong triggers on a 5.1. They look exactly like strong triggers on a 8 range. And the cool thing is, and this is one of the reasons why we keep it simple in the beginning. Watch this, Matt. Are you ready? Whoops, it came up on a different screen. It's the exact same strong triggers, but now you have no idea what time frame it is, right? But the look is the same. So it's not the time frame that we're using for momentum. It's going to be the exact same look on every chart. And we're going to keep it simple in the beginning. If you focus only on the 13.2 and the 5.1, what you're going to find is that simplicity makes it easier for you to focus on the patterns rather than having to look at more time frames. And let me show you this picture. I'll load this one. And this is why we just use the 2 charts initially. Your large chart, your 13.2, is just the large crowd. It's the general consensus of the market. There's a huge amount of people that say the market should go up in this picture. That's providing us the momentum. It's providing us the clear path. And then every now and then, there's a small crowd that wants to fight this large crowd. When we talk about entries, it's this small crowd that gives us the pushback to the best of the best area. And this high probability trade happens on only 2 charts every day, and it's so easy to keep it focused and simple. And then Matt, what's going to happen? Give yourself 30 days to read these indicators, and each day it's going to become more and more clear. Then you can use a 21-3, and it's just a higher time frame. The 21-3 is to the 13-2, as the 13-2 is to the 5-1. It's just taking it up a step and making that broad stroke even bigger. But for new users, using just those 2 charts, it gives you more opportunities for education, is really the biggest thing. Thank you for asking that. Gary, I think everybody can hear me. We'll give it to them in Navy terms. Everybody can hear me, right? You're giving me all these whys. I think we're good. Guys, sometimes you'll come into the room and it'll seem like, oh my gosh, I can't hear Mark. Just reload the room. Go through, log out, log back in. It'll typically clear it up. I don't know why Discord does that, but it does it every now and then. All right, rule number 2. Let's pull up the picture. Termination conditions false. Room to the profit targets are true. So rule number 2 says, don't trade into an area where the market is likely to stop. Guys, we call this a termination condition. This is the one that's going to provide you the advantage of a clear path. When there are no termination conditions, the path is clear. So we're going to use those same trigger lines that we use to determine momentum, and we're going to do a little comparison. When price reaches an area, we're going to see where those trigger lines are on our chart. The areas that we are going to use on the 13-2 to recognize termination conditions is going to be a magenta divergence high line. If price reaches that area, we're going to gauge red resistance, blue support, yellow 1-to-1s. There must have been a high probability trend trade in there. I see people posting. And also a divergence low. And newer users, that's the second half of what we do in this classroom. We're going to create this great foundation, a simple understanding of the rules, and then the class really takes shape when you guys post your charts in the room. So usually starting around 9:45, 10 o'clock, somewhere around there, we're going to start going through each and every picture that you guys post. We're going to talk about the advantages present. We'll talk about management sometimes. We'll talk about the advantages that were there, and also maybe the advantages that were given away in a particular trade. And that's typically the second 2 hours. But first, we got to make sure that we have a clear path, guys. These are the areas, and I'm trying to give you all these. I love to do it on a Monday because new users, I want you to be able to take these pictures and understand what it is that you're looking at. Termination conditions are a comparison between the trigger lines in these areas, and all it's doing is determining whether or not you have a clear path. And it's a simple recipe. It starts with price reaches an area. In this case, these price bars come down and they reach support. When support is reached, all you have to do is ask yourself, where are my trigger lines? If all of your trigger lines remain above support, remember that this is a 13-2 chart, well, you've reached an area that may stop the market. You've given away the advantage of a clear path, and therefore there's no more 5-1 trend trades directly into that area. And the process is going to repeat itself really throughout the day. Price reaches resistance, the trigger lines remain below. There's not a clear path, no opportunities for longs. We're going to sit on our hands and wait just a little bit, because 90% of what we do is reading our charts. 10% of what you do is going to be taking a trade based on that chart reading, based on those advantages. From resistance, price reaches support. The trigger lines remain above. Guys, there's that 90%. We're just waiting for the advantages. Ultimately, it comes and retests the area. Notice how the trigger lines all remain below resistance and a divergence high and a second resistance. This termination condition gives you a full reversal and that odds favorable momentum. Guys, this is a strong top. This is going to be a termination condition that creates a full reversal. You're going to hear me refer to this as a strong top. When you have a strong top, the market is more likely to reverse. Same thing from a bottom. Price reaches those 1-to-1s even with the odds favorable momentum. When the one-to-one is reached, none of the trigger lines are capable of breaking through that area. It becomes an area with the potential to stop the market. It takes away your advantage of a clear path. Ultimately, the market reverses. You can see that the small triggers break above the large, giving us that green background. Your large triggers go from red to green, and then it gives you that odds favorable momentum, guys. And there's one of those circles again. Sorry. Showing you that highest probability trade. And then I've got one more picture to help with these basic termination conditions. And this is about the easiest picture. You know, it took me 2 years to make this picture. But I really feel like this sums it up, guys. Price reaches resistance. We're using resistance for the example here. No triggers break through. The path, the area is not broken. There is no clear path. Rule number 2 isn't met. Both the small and the large triggers break through resistance. You can see that it begins to act as support. Now we have the advantage of a clear path. High probability trend trades. It's either A or B. It's like the ophthalmologist. 1 or 2. You either don't have a clear path or you do. But remember, we talked about, you guys are going to get so good at chart reading that you're going to be looking for these medium probability trades. The first medium probability trade that you take typically is going to be what we call a 50-50. It's a trend trade, and we call it a 50-50 trade. And it's not because that's your chance of survival. It's because your small triggers will have broken through an area with that odds favorable momentum, but the large triggers haven't yet broken. What it means is this 6980 area right here has the potential to break. It has the potential to break with all of that momentum, but it hasn't broken yet because both the small and the large haven't cleared the area. So newer users, give me a why again. Remember, we're keeping it simple. You're going to try to overthink this. I'm going to ask you not to. It's hard to ask sometimes. Price reaches an area, and if absolutely none of the trigger lines break through, sit on your hands. Be patient. You don't have that advantage of a clear path. When both the small and the large break through the area, the path is clear. Look for that high probability trend trade. And then after you work on this one for a couple weeks, you're going to really recognize this medium probability, an area with the potential to break. The smalls break through, but the large don't. And you're going to see these every day, over and over in the market. And if I open up my crude oil, price reaches support, right? And look at that. Not one trigger line breaks through, and it pulls all the way back up to resistance. Let's make that bigger for you. You get that little retracement right to the key area, and then it continues the move down. This support is going to be used as a profit target. The support is going to be a little red flag to not try and go short, because look at how high it pushes up. And if you scroll back on a 13.2, you're going to see how often these key Fibonacci areas, even if they don't reverse the market, create a bounce spot, taking away that advantage of a clear path. We're going to use these bounce spots as rule number 2, making sure that you guys always have the advantage of a clear path. So far, so good, right? Pretty simple. Make sure that your trigger lines tell you that the market's likely to continue, and then just make sure that you've got absolutely nothing in the way. I like to think of it as just cruising down the highway, right? You get on I-10 between Texas and California, you put the cruise control on 95, nothing in your way, everything keeps going the way. But the second you start hitting some traffic, things change. You've got to adjust your plan. There's one other termination condition that I like to talk about, and this is a termination condition that you'll see on every chart. But your 5-1 chart, that smallest time frame, is where you're going to see it first. And it's going to help you recognize when change is happening that you won't be able to see on a larger chart. Sometimes on your 13.2, price doesn't reach the area. And when it doesn't, it looks like it's turning from nowhere. It's not using Fibonacci. You'll see it from lows. You'll see it from highs. We can use this next termination condition on a smaller, faster chart. The only termination condition that I look for on a smaller, faster chart to determine that your 13-2 chart is losing momentum and may reverse. And that's 3 divergences in the same price range. And this is a very powerful termination condition when the third divergence has the small triggers inside of the large. So once again, Matt, like we were talking about, it's the exact same pattern. Odds favorable momentum, anything can happen triggers. When we see this on the smaller chart and it's coupled with these 3 divergences, that market may push up a little higher from a low. It may push down a little lower from a high. And we'll see this look. On the 5-1, 3 divergences in the same location. Are there? Are you comfortable taking pictures, Matt? Let's go to the ES. I'll take a look at it. I've got 2 divergences from a low, and you're absolutely right. So we're getting 3 in the same area. It's a little spread out. We have the potential for a third. The S&P appears to be a little bit stuck right now, doesn't it? The smalls are below the large, but the large are wide. They're angled down. We've had 3 divergences on our higher time frame as well. Hey, Gary. Kind of in that holding pattern. We don't have agreement yet. Just waiting, and we'll see how this plays out. You've got 2 divergences from a low. You've got, 3 divergences from a high. Guys, there's a big struggle going on right now in the market, and there's a big news release, I think, in 15 minutes, 30 minutes. Maybe it sets them free, but right now we don't have agreement, and I think this is the lesson in this one. My 13-2 says down. My smalls are below the large, but my 5-1 says up. There's some indecision going on here. This is a great opportunity to stay in a holding pattern. And when you get these lows and highs with the multiple divergences, it kind of help you identify these terms that aren't from an area. So 13-2 gives me the advantage of momentum. 13-2 is going to give me the advantage of a clear path. Guys, can everybody can hear me in the room, right? And guys, if you ask a question or make a comment in class, listen to my reply. It'll help. So we've got 2 out of 3. We have momentum. We have a clear path. Guys, let's find that entry area. Let's refine this down to the best of the best spot, right? We're going to that smaller, faster chart. We are going to take that overall momentum, that overall clear path, the overall trend. And guys, this is going to be the look on your 5-1 when the 13-2 has the rules met. This one will have the 13-2 in an uptrend. One thing that you'll notice, Matt, newer people, Doc Luck, is when everything is perfect, your charts will agree. Your biggest time frame is going to have strong triggers to the upside. It's going to have price bars to the upside. Your areas are going to be support, not resistance. And your 5-1 is going to look the same. You should have that odds favorable to the upside. Large triggers are coming up strong. They are, in a perfect world, and let me share this with you, stacked one on top of the other. Both your large and your synthetic are strong, angled in the direction of the trend, overlapping. Whoops. I take a lot of pictures. And this is where you're just going to decide it's time to take a trade. My rules are met. Let's find an entry. So you're going to focus your attention on the large triggers coming up and the areas that may fall within them. And trend trades always come from an area. It's rule number 3. There needs to be an area present. And those areas can be Fibonacci support or resistance. It can be a mid-band, and it can be one-to-ones. And we always trade from an area. You're always going to trade from an area. I want you guys to think back, throwing a tennis ball. How do you take pictures? Duck Luck? We'll do that. Let me go through entries, but while I'm doing that, Do me a favor, search for your TechSmith Capture app. When you download the indicators, typically that ends up on there. Open up your TechSmith Capture, and if you don't have it, that's the best question ever. If for some reason you don't have it on your computer, here's a free download. It takes about 3 minutes to install. And TechSmith Capture is going to allow you to take pictures of everything that you see. So what I'll do is I'll go through these entry conditions, finding that best of the best spot, and then the next lesson that we have, we'll be taking a picture with the Capture software, talking about how to annotate charts, how to post it in the room, as well as how to post it into a spreadsheet. So if you want to download it, if you haven't already, it's super simple, free download. It's going to ask you if you want Windows. You're going to need Windows, right? Click on it. It'll show up in your download bar, and it literally downloads that fast. Once you run that, it's going to give you this yellow icon, the TechSmith Capture icon, and up comes your software. Let me know if you need any help with that download. So from the 13.2, we have rules 1 and 2. On the 5.1, we've identified fibs, mid-bands, 1-to-1s. They're coming into those large triggers. And guys, our rules say that we're going to use a limit order to buy or sell a pullback, meaning that you're going to wait for the market to come to you. And a pullback is nothing more than a small retracement in price. When everything says up on your 13.2, when everything says up on your 5.1, when the path is clear, the momentum is strongest, you want the market to come down to you and smack into that limit order. And your pullback, that small retracement in price, starts with a reversal bar on the 5.1. And at the time of this reversal bar, you'll create your window of opportunity. And your window of opportunity in a long trade will extend from the highest point of support inside of favorable large triggers to your lowest point of support inside of favorable large triggers, guys. This is that third part of chart reading, that understanding where the market is likely to continue. You'll activate your limit order right at the top of that window because of the momentum on the 13.2, and you'll simply wait. I'll right click, I'll activate a limit order, and then I just have to be patient. I'm no longer in control. The only thing I'm in control of is whether or not the rules are met. If the market pushes back, there's that small retracement going against everything, right? Let me get that picture that we looked at. Who's in control? There it is. Everything says up on the 13.2. That small group of yahoos is going to fight momentum. They're going to fight the trend. And guys, that's going to give you your little bit of a pushback right to that area of support or resistance inside of favorable large triggers. If the market pushes back and hits that limit order, you're now in a long position. Remember, we're talking advantages. You're in a long position with the advantage of momentum provided by the 13.2. You're in a long position with the advantage of a clear path provided by the 13.2. And now you're in a long position with the advantage of an entry coming from the area where the market is most likely to continue. Guys, the trifecta is complete. You have every advantage. You're now in the market. And this is a trade that I'm taking 1,000 out of 1,000 times because of the advantages present. Because I waited for the pullback, my initial risk is going to go outside of that window of opportunity. And this is a trade that when you follow the rules typically wins 70 to 80% of the time. You're creating confidence through the memory of success in that first 30 days. You're giving yourself the advantages. You're taking a trade that typically wins more than it loses. And you're really learning to identify advantages so that you can take those beyond this high probability trend trade and begin to recognize more advantages within the market. Once the market moves in the direction of that trend again, you can reduce your risk below it, below the reversal bar. Because you waited for the pullback, your profit potential is increased. Guys, this is your best of the best look. This is your high probability trend trade. And when you put the two pictures together, here's our 13.2 chart. Strong triggers, smalls above the large are wide, they're angled in the direction of the trend. Price has not reached the divergence high or the one-to-ones or resistance yet. So you turn your attention to the 5-1. There's your reversal bar. Here's your areas of support inside of favorable large triggers, that window of opportunity. Your entry is right at the top, and ultimately it continues onto those key areas. Notice that the circle is around the tail. We're not trading tails. You're not trading that tail on the 13-2. What you're trading is that area inside of favorable large triggers on the 5-1s. Hey, good morning, Abdul. Guys, do me a favor, especially my new people. Are you comfortable with the concept? Momentum is going to be the easiest thing to recognize. Let's go to a 13-2. When I have strong triggers, small's above the large are wide, they're angled in the direction of the trend. This was about 3 a.m. this morning. I'm going to scroll back. Ooh, not a lot happened. I feel like I'm missing data. Guys, I'm going to refresh my data real quick. I feel like I'm missing some stuff here. And we'll take a look. 13-2 gives you odds favorable momentum. 13-2 gives you the clear path. That tail on the 13-2, if it lines up on the 5-1, guys, this is your way to study. You can go back historically and look for all of these tails. You can scroll back 10 days, you can change it to 20 days, 30 days. And if you circle these tails on your 13-2 and they line up with an area of support or resistance on your 5-1, when the rules are met, you know you have a high probability trend trade. Did that help? That didn't help. I feel like my workspace might be a little corrupt. We'll see. Let's look at crude oil. Crude oil, strong triggers, everything says up. This looks exactly like the picture from the manual, doesn't it? And then price just pulls back. Doesn't look like we got the pullback. Is that 934? Not quite to an area of support inside of favorable large triggers. You scroll back just a little bit, pulls right to resistance, right at those trigger lines. I think a lot of you probably took this one. And it comes down. So we're just looking for advantages. When those advantages are had, we're looking for the opportunity for entries. Who was asking? Ducklock, did you get your TechSmith capture? And this is for everybody, guys. Taking pictures is one of the most important things that you can do in this classroom, because there's a very, very proven recipe for becoming a confident trader ASAP, and it revolves around posting your pictures in class and then tracking your trades in a spreadsheet. And this is really the recipe for getting you where you want to be with recognition. Oh, it's okay. I wanted you to get it because I was going to stop class and talk about pictures. So let's do it this way. I'll still talk about it so you have that foundation, but let me go to the software user guide. And I'm going to give you the link as well. And if you want, when we take our first break, download it. I'll get you the TechSmith link as well. When we take our first break, I'll take a couple extra minutes just for you. I'll take a longer break just for you. I'm such a giver. You can download it during the break or get it downloading right now and let it run in the background while you listen. And then if you want, guys, when we start that second hour, we'll go through the capture software tutorial. Sound good, Duckluck? I want to say Ducklock. I don't know why. I'm transposing. And then we'll go through taking pictures once we get to that point. And guys, that's really what we're doing in the first hour. We're talking about advantages. I'm really missing something here. I'm going to close down this workspace real quick. George, okay, cool. Thank you for that. I'm going to reopen my S&P and I'm going to see if that gives me everything that I need because I'm missing a little bit on here. Sometimes that happens. So right now what my software is doing is it's calculating. It's taking every one of these pivots in the market and it's going back historically and it's creating synthetic timeframes forward and it's measuring and it's doing Fibonacci calculations forwards and backwards and it's compiling all of these areas and it's weighing them out for strength, for consistency, confluency, and it's creating in the moment, guys, these areas of support and resistance right on your chart, and then we're going to be able to use those to give ourselves all these advantages. And now it looks like I've got a little more going on here, which is great. Perfect, perfect. And there's those three divergences and the market pushes lower. Pretty cool. Higher divergence triggers inside, the market pushes higher. And all we're looking for, guys, whoop, it's still calculating. I'll let it run. All we're looking for is rules to be met on the 13.2. We can kind of see it in the moment, right? The small triggers are above the large triggers. The large triggers are wide. They're angled in the direction of the trend. We're still coming up with fibs. The smalls are breaking above these one-to-ones, but the large triggers remain below. But if you look at your 5-1 chart here in the moment, and I'll take a picture of it, I can create from the top of my trigger lines to the bottom of my trigger lines. Let me make this bigger for you guys. Here's a great example of that window of opportunity. If you study on your 5-1 from the top of the trigger lines to the bottom of the trigger lines, your window of opportunity, will extend from your highest point of support to your lowest point of support inside of those favorable large triggers. You see how you're able to refine to that area where the market is likely to continue? The reversal bar is printed. We've identified areas of support inside of favorable large triggers. And now it's all up to the market, isn't it? And it's sure enough, it was calculating in the moment. Guys, do you see how that happened? Right back to support, right inside of favorable large triggers, and then it continues to move up to Fibonacci. That just happened live in the S&P. That's kind of cool when that happens. Oh, it didn't make it, sorry. Came close. What we were looking at is a little previous, sorry. Guys, I had a big travel day yesterday. I spent about 8 hours in airports. Got home about midnight last night. So let's do this. We have news coming up in 10 minutes. We're going to have high impact news at 10 a.m., the ISM manufacturing. We're going to see what that does to the market. I'm going to leave the S&P up. If you need capture software, this is a great opportunity to do it. But I'm going to scroll back. I saw some of you guys posting pictures today. Let's see what you're looking at. This is the second half of what we do in class, guys. You post a picture and we talk about it. So Tony says, Tony, let me figure out which charts we're looking at. Here's your 13.2 right here. Guys, remember, the patterns are the patterns. Tony's been with us a little longer. He can analyze more charts a little more efficiently. But if you look at his 13.2, he has strong trigger lines and no termination conditions. And Tony, this one's hard to read. It looks like you're coming back to resistance inside of favorable large triggers. And taking a second one. Ultimately, it says down, it says down, it says down, it says down, it said down, and Tony went short. Did 2 shorts? Awesome. Guys, I've been with the software for years. Tony's charts confuse me a little bit. I can see it because I can read the indicators, but if you focus on keeping it simple in the beginning, and Tony's already kept it simple, which is why he's able to use more charts and get this information. Focus on your 13.2. Focus on your 5.1. Every time you take a picture, annotate that chart with the best of the best information. Keeping it simple in the beginning, but ultimately what Tony's showing us, here's his 13.2. There is strength, and there's nothing in the way. Awesome, Doc, George. And then his 5.1 chart's over here. He's looking for the entry. They can help Tony quite a bit. I use them for momentum initially. When my largest chart says odds favorable, when my smallest chart says that there's a potential entry, I'll typically use a range chart just to gauge that momentum, just like you did here. This 13 range is slow like a 13.2. So I like it. I like the addition. Making sure that you have the 13.2 leading the way, and then working from there. Thala, let's see what you did today. Thala's taken the exact same trade, right? 13.2 says strong trigger lines. The smalls have broken through, the large have not. Where is that? Maybe that's a 21. 13.2. Trying to line you up here. You entered around 817, which is back here. This is my 13.2 chart. There's my pullback directly to resistance inside of favorable large triggers. Overruns just a little bit. That happens sometimes. That's why we keep stops in place. And you're able to get paid. Thala, it's a nice trade. This one bar is what we're looking at right here, guys. He's just taking that picture a little after the fact, it looks like. Or maybe it's 911, 911. Nope, it's this odds favorable. This tail is this pullback. Nice trade, Thala. I think on the break, I'm going to get one more cup of coffee. Paul M. Here's your odds favorable right here. I love it. Smalls above the large are wide. They're angled in the direction of the trend. Your first circle around 7 a.m. I don't see on this chart. As you come back here, you'll notice that we don't have odds favorable momentum. We have those weaker trigger looks coming through. Is your checklist correct? Everything but momentum. Your smalls are at the beginning of that acceleration, Thala. Do you see it? The smalls have broken down below the large. So what you're looking at is the beginning of that separation. You're actually trading what could be the beginning of momentum. Does that make sense? So I would give this one a yes. Momentum is on your side. And because you're coming off of resistance, I like it. And because there's no fibs or anything in the way, for sure. Since it was very close, you marked it as a no. That's okay. Don't worry about close. Very much take the Yoda approach, right? It either is or is not. There is no try. Either do or do not. There is no try. You either have odds favorable momentum or you don't, guys. And for the high probability trend trade, you either have this look from the acceleration to the deceleration, and you're at the beginning, you're at the acceleration, or you don't, or you have that anything can happen where there's a little bit of indecision. Allow it to be simple. See right here, odds favorable momentum, Paul M, this is you. And then here, we don't have the advantage of momentum. And that's not a deal breaker, right? It could be a medium probability trade. Paul's taking a momentum style off the bottom, quick entry, quick exit, and then he's taking a pullback. He gets in at the large triggers, doesn't quite get the area, but with everything going up, this is a little different look. It's not a high probability trend trade. This is just taking advantage of understanding trend. It's taking advantage of understanding direction. When every chart agrees, sometimes you can get away with those trades. Nice trade, Paul. Just taking the advantages in place and looking for opportunities based on them. And then Alan, let's see what you did today. Same trade everyone else got, right? Smalls breaking below the large are wide, they're angled down. And I love this look because it reminds us about termination conditions going the other direction. Price retraces all the way to resistance. When price reaches resistance, every trigger line is below resistance. Resistance is likely to stop the market. Getting in at that area of resistance, right there at the large triggers, right? Resistance holds, stops in the correct place. You get your first profit target, and then you get that divergence with the small triggers inside. You say, I'm going to go break even. I'm not going to risk too terribly much. And then, are you with me in here, Alan? We can do a little lesson on stop placement. So the idea on stops, guys, is to put the stop where the market shouldn't go. For entries, it's beyond that window of opportunity. Once you're all the way down here and you are up $230 of profit, divergence prints, you still have the rules met for a 13 on the 13-2. You still have odds favorable. You still have no termination conditions. Your area of entry is going to be that area inside of favorable large triggers. If it moves 10 points beyond it, you definitely don't want to be in that trade anymore, right? It's okay to tighten up. When you notice that you go to anything can happen triggers, when you notice that you no longer have areas inside of favorable large triggers, guys, it's okay to take a little bit of profit on that second contract and wait for things to be perfect again. I'll tell you what, it is 9:56. I'm going to set up, where are we at? Tony, we're going to come back to you on your next post. But guys, let's open up the S&P. We have news in 4 minutes. I'm going to go pour a cup of coffee real quick. You guys can watch the market. If you take a trade, post it in the room. If you don't take a trade, but you want to take a picture, we can do that. George, when I come back, we'll use TechSmith Capture to take a picture of the charts to annotate to get them into the room so that you're comfortable. And we're good. And guys, I noticed that I have 5 messages down here in Discord. Just so you know, I don't check my messages during class because then I can't give you guys my 100% attention. I'll take a look at them right now. But if you're posting pictures, let's see what's going on. If you're posting pictures, and I don't believe that's anyone in the class. David, are you in here? I typically don't see them in Discord. DHL, are you in here today, David? Let's scroll down. All right, guys, I'm going to leave you with the S&P. Anything can happen, triggers, but there's definitely a clear path. No areas inside of favorable large triggers. And news in 2 minutes, guys. Let's see if it creates some fireworks. I'll be back in just a few minutes. All right, guys, I'm back. And David, you got it. Nice job. Yep, sorry, I was on break, Neil. Working on something on the sidelines. Guys, doesn't look like the news had a huge impact, right? Took us directly to a termination condition. At that termination condition, there was also multiple divergences, wasn't there? And look how the market's pushing down. Understanding where the market is likely to stop creates an advantage for you guys with Nexgen software. You can see this before the market ever gets there. You can find these areas, and I want you to see something pretty outstanding. I want you to look at the look right now. There's a pivot straight to support, back up to a pivot stop out at resistance. Guys, if you go back to the manual when we talked about termination conditions, it's a very similar pattern, isn't it? And this is one of the reasons that I stress it's okay to keep it simple initially. What happens is you're going to begin recognizing these patterns over and over and over again. And one of the best ways to do that is through pictures. George, are you with me? Guys, let's do capture software. If you've never posted a picture in the class, do me a favor. Take a picture. Follow along with me. It's as simple as using this great big red button. Once I click it, I have two options. I can hover over one of my charts, and it'll take a picture of just one chart. Or, and what's preferred, is I can come up to the upper left-hand corner and click on my left mouse button, and I can click and drag it all the way down to the bottom right. Things that I want to keep in mind. Give me that timestamp. Make sure that I can line up your timestamp so that I can get between your entries on the 5-1 and look at what was happening on the 13-2. And I'm going to release the button. Once I release the button, it gives me two options. I can either take a picture or I can start capturing a video. I'm just going to take a picture, capture an image, and up comes my image preview. And the image preview is going to be the exact likeness of what was just on my screen. You can see that I have the 13-2. I also have the 5-1. Sorry, I'm answering real quick. And then from here, this is how you and I are going to have a conversation. So if you're brand new, you may have a question. You can use the arrow. Mark, is this a termination condition? Well, no. Price didn't reach an area. Mark, is this a termination condition? Absolutely it is, because price reached an area and none of the trigger lines broke above. So you can use these arrows. You can highlight areas. But the most important tool that you're going to use is this call out function, guys. This is how you and I have a conversation. Every time you take a trade, every time you read a chart, every time you think your rules are met, or if you're just taking pictures to remind yourself that the rules aren't met, you're going to type on that chart. We're going to have a conversation. If you post your questions on the chart rather than in the chat room, I have a better chance of seeing them. And the more information that you give me, I just posted that picture of how to annotate a chart. The more information you give me, hey, Mark, I had odds favorable momentum, and I had no termination conditions. Look, Mark, I had a mid-band inside of favorable large triggers, and a lot of times someone will ask me, hey, Mark, was this a good trade? Mark, was this a good entry? Well, if you get in the habit of writing your rules on the chart every time, then you know if it was a good trade. You know if it was a good entry. You know that you were able to follow the rules. Once you have that picture, there's two ways to get it into the classroom. What a lot of you guys have just done, Adam, Matt, Thala, you click the upload button and it's going to give you the screencast address, and that's kind of your picture going up to the screencast cloud. I click copy and I can come right over to the chat box in the education room. Control V if you're in the pop out, just right click and paste if you're not. And now we have that picture in the room up for discussion. You can also just click copy and it's going to put it onto your clipboard, and then you can come in and post it right in the room, and you can see that it's provides that image without the screencast link. So if you'll practice taking pictures, guys, it's okay to put a picture in the room and say, hey, this is a test, or hey, this is what I'm looking for. But when you're taking trades, do me a favor. Write those rules on the chart. Let me know what you're looking at. Let me know what you're thinking. And then what I can do is I can give you the best feedback possible. I can look at what you've done, what you're doing, and hopefully how we can do it better. All right, so I'm going to scroll down. Tony, I believe you were next in line with the picture. See if I can find it. I think that the picture that you posted second, Tony, or the one that I just looked at, is the same picture that we saw before. Using that 13.2 momentum. Tony, you know that you're missing trigger lines over here, right? Okay, I was like, I don't see any momentum on that one. So it's hard to gauge. Okay, I just wanted to make sure that you're aware of that. Sometimes people post pictures in the room and I'm like, you know that you don't have a mid-band, right? And in the beginning, you probably don't. So I may tell you from time to time, let's get a mid-band on that chart. Let's give you an extra area to trade from. That was your second pick? Okay, that's what I thought. All right, Thala. Thala, there's the trade that you took, and then you get odds favorable momentum, right? The market's not coming from a good top or bottom. It's not a termination condition that creates a full reversal. So we can check no on this one. You definitely have odds favorable momentum. Small's above the large are wide. They're angled in the direction of the trend. And now in no termination conditions. Thaler, are you with me? Price reaches these one-to-ones, right? And absolutely none of my trigger lines break through. So 80.07 really represents a termination condition. So you've taken away the advantage of a clear path here. The blue line is divergence down here. It is. But what's the recipe for a termination condition? Price reaches an area, these one-to-ones. None of the trigger lines break through. So technically, we don't know if this area is going to break or hold, right? Just no advantage of a clear path. Cool. But I want to throw out a lot of advantages on this one. You do have momentum. You've got that great push. It is coming from divergence, right? You get in at the area inside of favorable large triggers. There was no divergence on the pullback. Yep, fib, one-to-ones. Yeah, so those are the areas that you're looking for. Because of a great entry, it becomes a manageable trade and you're able to get paid on it. It's a nice trade. And as long as you go into a medium probability trade, understanding that you don't have the clear path, well, then it gives you the opportunity to manage it aggressively. Not even a 50-50. This is directly into a termination condition. What's a 50-50? When the small triggers break the area, but the large triggers do not. This blue area had the potential to break, but it hadn't broken yet. And with all that momentum, sure enough, it broke. Once these small triggers get above the one-to-ones, then you're in that 50-50 scenario. This is a difficult one. Yeah, because you are trading into an area that may reverse the market. And then especially because this isn't coming from an area. This becomes a great spot for continuation down. Yeah, it's a great picture though. A lot of good information in there. And then let's see what, I'm going to go to crude oil real quick. I love to check the afters, guys. When I take a trade, I like to go look after. And I think this is the trade that you took. I have fibs on mine, you don't. So I'm coming from a termination condition, which only increases the likelihood here. Nice trade, Thala. let me scroll up. We'll look at the next one. Alan, let's see what you got. Alan's taking the same trade, right? Pretty close. Odds favorable. 13-2 is a 50-50, right? Alan, do you see it? Here's one of those 50-50 trades where the smalls have broken through the area, but the large have not. Guys, if you're brand new, give me a Y in the room if you're with me on this one. If we go back to termination conditions, there are 3 scenarios as you come into an area. Let me pull up the picture for it. No triggers through, no trade, right? There's no clear path. All of this is what we saw in yours. Both the small and the large break the area. You now have a clear path. And then the one that we just had, the small triggers break through, but the large are not. We have the potential to break, but it hasn't broken yet, so it's not a clear path. So guys, we have the potential to break, but not only has this divergence high not broken, this area of resistance hasn't broken completely either. Does everybody see that? Give me a Y in the room if you're with me. This is one of those medium probability trades. And this is a trade that needs to be managed a little more aggressively. This is what we call a 50-50. So while there's not a direct termination condition like we see here, this is an area that hasn't yet broken. So when we talk about 50-50 trades, when you're talking about a trade where the area hasn't broken, for new users, I like to show this one. The smalls make it through, the large don't, the area is not broken. It's okay to insist that your entry on the 5-1 chart is perfect. No divergences, right? Make sure that you have strong triggers. Make sure that you have that small window of opportunity. Alan, what we saw in yours is you already had 2 losses of momentum at an area that hasn't quite broken. Your entry's perfect, but those 2 divergences just push it lower, 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 right? Outside of that window. Does that make sense, Alan? You guys, sometimes you post a chart and I know you get back to trading. So remember, every chart's for everybody. It doesn't have to be just for Alan. On a 50-50 trade where the area hasn't broken yet, it's okay to insist on every advantage on the 5-1. It's going to increase your chances of success. When you begin to lose momentum, it may push further. Let's see where we're at. Next picture. And guys, John posted in there. I'm going to show you. He put a link to it. Let me open up my Discord on the other side. On the Discord page, ladies and gentlemen, there's a 101 basics for you new users that are still getting into it. Terminology, what's a trigger line? What's a Renko bar? How does the software work? What are the pictures? What are you looking at? Guys, this is a pretty amazing get your feet wet kind of thing. I'm going to repost his link. I know he posted it up there. He didn't put much comment on it. That 101 basics is going to help you guys out a lot if you're day 1, day 2, just to get the terminology down a little bit. We're going to go to the next picture and see where we're at. That was Alan. All right, Abdul. Abdul takes pictures. This is my pre-trade. Here's my smalls through the area, my large are not. No divergence. He takes it just above the mid-band inside of favorable large triggers. It's a 50-50 trade, right? When divergence prints, the advantage is lost. He's able to get in, get paid, and then when the divergence prints, he exits the trade on the 50-50. Market comes back up to resistance, no longer a high probability trend trade. He's from the wrong side of everything. The large triggers are coming up, right? And that one doesn't work. That was your edge trade. So Abdul, on your edge trade, What did your 21 say? Because remember, that's a precursor, right? If you're going to take an edge trade. Was your 21 cranking down with odds favorable momentum and a clear path? That 917. Okay. So one of the ideas behind an edge trade, Abdul. So let's look at your 13.2. At the time of entry here, the 13.2 is in an uptrend, right? The smalls are up with strength. It's a 50-50 trade that failed. This area with the potential to break didn't. Divergences printed, the trend changed, right? At this point, there's no indication that this wasn't much more than just run over. So if you're going to take an edge trade, and this is just one of the rules for edge trades, and one of the reasons that we don't teach them, but I want to help you, is the 21 has to have odds favorable momentum and no termination conditions. So if your 21 was screaming down like a 13.2, hey, good morning, Mike, ready for a high probability trend trade, well, then this resistance in mid-band really becomes almost like a trend trade on the 5-1 to the 21. Does that make sense, Abdul? You're just stepping it up a time frame. So if you're not using that time frame, well, then you're robbing yourself of the most important tool for an edge trade. I hope that made sense. And then there's that same long. Are you and Thala on Skype together? Odds favorable. So this was just a little bit of overrun, right? And it happens sometimes. 50-50s that don't work at key areas might just be overrun. And I can tell you from the look of this fib, you were at support at a 21.3 as well. But then everything reverses and you take that great entry. And let's see how long you held it. Because you put bingo on there. And then sure enough, that great entry, all the way up to resistance, all the way up to that divergence high. Great trade, nice recovery all the way. So all we need to do now is just get that trend fighter out of there, right? Let the money you make on this great trade not make up for the one that wasn't quite as high probability. And guys, I think that's a big part of being a trader. Focusing on trades that have all those advantages, focusing on trades that give you the best chance of success, and then eliminating those trades that don't really have the advantages in place. I hope that helped a little bit. And David, are you reposting the pictures that went into the messages? Is that what I'm seeing, or are you trading live? Because I can go back and look at yours as well. Abdul, thank you for that. Guys, I want you to notice that Abdul takes pre-trades, he takes post-trades. He analyzes not only what's happening at the beginning, but also at the end. So here's your 50-50. Adam, you identify the 50-50. Two divergences to take out the previous low. And it does, right? It does take out that previous low. And then it goes even more. Maybe waiting for a reversal bar. Maybe waiting for a close on the right side of the triggers. Or maybe just waiting for that path to clear. And I like this. This is good analysis, Adam. You're looking at what you saw. Two divergences pushed it lower. I think we saw a lot of people take this one. Let those small triggers roll. Adam, are you with me? Let's talk about a continuation entry real quick. Sometimes that one doesn't work, right? And it happens. But you still have odds favorable. The smalls are still above the large now above the area 100%. Adam, go back and study some of these that look like they got run over a little bit. And you'll see when the small triggers roll, it kind of changes. and you'll get these little stab backs. Little stab backs to the small triggers, and if they're right there at an area, it becomes kind of a continuation opportunity. And if you go back and look at these, and John Novak's got quite a few pictures of them, and I may have one for you guys in my archives here. Let me give you this picture, Adam. So Dave B, I'll show you. But remember that the conditions still have to be right on the 13.2, guys. So here's, you're looking for the long, right? 3 divergences print. It pushes lower. The small triggers roll, letting you know that the momentum's changing. Dave B, I'll have a limit order sitting just above this midband that's right at the small triggers. And you see it again here. Everything rolls, and I'll have a limit order waiting right at that midband, right at the small triggers. But the key to this continuation trade, guys, and Adam, on yours, if you look at it, it still looked good for a long, didn't it? You still had strong triggers. The smalls were still above. It just wanted to push a little bit lower with these divergences. And Dave B, this one may not have gotten you, but that's what I'm looking for. I'm looking for a visual that things are starting to go. Notice that the synthetics are still up. The large triggers are still up. Now the small triggers are up. Every chart agrees. If you go back and look at some of the trend trades that don't work, look for these opportunities. See if they presented themselves. Did that make sense, Dave? Awesome. Guys, remember that anything that wins 70 to 80% of the time is going to have challenges 20 to 30% of the time. All right, Gary. All right, your 13.2 is at a termination condition there at 66. Large not through, smalls barely, divergence prints. You wait for a market flow confirmation. You get it and you get out right at that area that hadn't broken. Great management, Gary. Trading into a termination condition for sure. You get in at the bottom. Nope, you get in after confirmation. Remember, confirmation doesn't eliminate termination conditions, guys, and that's such a big part of it. No worries, Matt. Are you using Snagit or are you using Capture? Capture? Cool. So when you capture, where did my capture go? There we go. See if I can get my capture up. Sometimes when I close it, it doesn't come back. See if I can get that to come up real quick. Because annotation's a big part of what we do, right? Annotation's important. So I'm going to kill my TechSmith capture from the computer over here. And get that back up. No problem, Abdul. We'll talk about it. And that's an 8 range lesson. So what we'll do is we'll go to that. Let me go through and show Matt real quick. Matt, when you capture and you take that picture. Thanks for the help, Mike. I got it. Right at the very top is where you're going to have the tools. There's the arrow tool, so you can point things out. There is the shape tool if you want to show me areas. And then you've got the call out button. And the call out button is where you're going to be able to annotate the chart. And you can put as many call outs as you want. So guys, do me a favor. I see a lot of you posting a lot of charts without anything written on them. If you're brand new, if we don't have a relationship over the last 30 or 40 days, tell me why you're doing what you're doing. It helps me out a lot. All right, so let's talk about that confirmation real quick. Adam, we'll look at yours. Good triggers, 50-50. You let the area break. It pulls back. You take market flow confirmation. Second, lower divergence with the small triggers inside. Says get out, break even trade, right? It was worth a shot. Didn't work. Nice management. Cool, Matt. So, guys, I said that confirmation doesn't change that there's not a termination condition. And Abdul, I'm going to show you exactly what I mean. And this is why I keep it simple in the beginning. You guys are about to put me on a soapbox. I hope you know that. The 8-range chart is a market flow chart. And new users, Matt, all you guys that are brand new, you'll get to this chart. The market flow chart gives you a little extra information. It's used as a confirmation chart. But the key, and Abdul, here's the biggest part of it. Market flow signals are valid when the rules are true. And that's the biggest thing. If you're breaking a rule and hoping that market flow gives you success, it's not going to magically make a problematic trade better. Does that make sense, Abdul? So if I've got a termination condition, but market flow gives me an entry, market flow gives me a signal, if this is a termination condition, it doesn't matter what market flow says. It's still a termination condition. So, and this is why I always tell new users, don't worry about a market flow chart now. You don't need it yet. Right now, you're just learning the rules. You're learning to find that great entry, to understand momentum, to understand when you have a clear path. And then it becomes a tool that you can use when you're very comfortable with your rules for entry. Because when you get to that medium probability, Abdul, maybe you have a 50-50 trade, right? And it's got a couple divergences, and you're like, everything still says up, but I'm going to wait for just a little bit of confirmation. Oh my goodness. George, I think that's I love legacy. My kids don't want to learn this yet. And what's great is you're not only learning how money works, you're learning psychology in this one. You're watching how the market reacts to fear and greed, and then you're going to be able to use Fibonacci for those reflections on it. Guys, 50-50 trade once again. Small's below the large are wide, they're angled down. Everybody give me a Y if you see this. This area right here has the potential to break, but it has not broken. If you take the first entry, oh, very cool. Yeah, let's get them taught. And with futures, you get that leverage. Guys, I've got strong triggers, but I've got an area that hasn't broken yet. If I take the first entry, there's 3 divergences, right? There's that managing assertively. You can get in at the best spot, make a little money, go break even, and now you can see through multiple divergences, you can see that fight at these key areas, helping you manage a medium probability trade. And look what the market does. And I agree, Abdul, 100%. 100%. If you're not comfortable with 2 charts, you're going to confuse yourself with 3. And if you're not comfortable with 2 charts, 4 or 5 charts is really going to confuse you. So make sure that you keep it simple first. Make sure that you are comfortable with the most basic approach. And then from that basic approach, you're going to grow exponentially. Let's see where I'm at with pictures here. Adam, did we see this one? We most certainly did. Matt? Just playing around, getting used to it, right? So there's 10 a.m., there's 10 a.m. All right. Matt, I love this picture because you're just playing, right? Everything begins with odds favorable for you new people. So everything begins with those strong triggers. And what we're looking at where you're playing here, I know that you're just getting used to all the controls and stuff. Large triggers are up. The small triggers are still up. So we have that indecision. It's not odds favorable to the upside. We have potential termination conditions. You can see how things are kind of scattered over here. This is just a little bit of consolidation that we're waiting for. I like that you're getting in and learning. And this is a great first picture to take. This is the, I think, but I'm not sure. I'm just going to make sure that I can get in and out of the market. And the fact that you're on simulator is perfect, right? Break everything. Break every rule you can break. And then as you start annotating, you can tell me why you did what you did. And then we can talk about the way you're thinking a little bit and your chart reading, and then start nudging you in the right direction slowly. And then next thing you know, you'll be like chart reader extraordinaire. Because that's how the classroom works. Day 1, you're like, holy smokes, this is a lot. Day 2, you're like, all right, it's starting to make sense. By the end of the first week, things really kind of get you there. So T. Mier, great test picture. Now I know you can post in the classroom. You're in trouble. Guys, the more you post, the quicker you get to where you want to be. David, you're asking me, entry here? I don't know, David. Can I give you the Sunday school answer first? Guys, if you ever ask me, is this a trade? I'm always going to reply, are your rules met? Right? So David, what are your rules for a trade? Is it strong triggers? Is it smalls below the large? Odds favorable momentum? Are you looking for the high probability trend trade? Cool. So let's go through it. And David, this is the best segue ever. Thank you for doing this. Is this a trade? Let's find out. I'm going to show you guys the easiest way. You'll never have to ask again if this is a trade. I'm going to give you a checklist for a high probability trend trade. I'm going to drop it in the room right now. Is this a trade? Are your rules met? Do you have odds favorable momentum? So David, what I'm going to do is I'm going to put a checklist on your chart, and we're going to go through it together. And guys, this is one of the reasons that I am so interested in you guys showing me your rules, writing your rules on your chart, because you'll never have to ask me if it was an entry. You'll never have to ask me if the rules were met if you start this habit now. If you use Snagit, guys, you can do this. Watch this. Boom. There's a high probability trend trade checklist. Is the market coming from a good top or bottom? David, the answer is yes. I have a termination condition that creates a full reversal. Do I have odds favorable momentum? Smalls are below the large are wide. They're angled in the direction of the trend. So we're 2 for 2 so far. No termination conditions on the 13-2. We have a clear path, guys. David, are you with me so far? I got 3 out of 4. So once the rules are met here, here's your reversal bar. Here's your trigger lines way up here. So David, did you have an area for entry inside of favorable large triggers? Nope. So it's not a high probability trend trade. What you have seen here And guys, I won't tell you that your trades are wrong ever. I'll tell you the advantages, the disadvantages, and I'll show you what I see. David, what you recognized here, and it's a great chart read, this is a momentum style trade. This is taking a termination condition, this is taking a reversal, this is taking odds favorable momentum, and a quick little pullback right to those one-to-ones, right to an area. This is what we call a momentum style trade, David. It's a little more advanced, it's a little more difficult to catch, to recognize, but it is very much an entry. It's just not a high probability trend trade entry. So if you go to the trading rules, David, what you managed to take there is a momentum style trade. But if you get in the habit of writing the rules, why did you do what you did? Because David, you may have said everything that I just said in your head, but if you put it on the chart, well, then we get to have that great conversation. I know exactly why you're doing what you're doing, so that if there's a challenge with your read, maybe you said, well, I didn't have odds favorable momentum. We can talk about that. Or you're talking about, well, I didn't trade into a termination condition, and perhaps you did. That's how these conversations really come in, and that's where you start to grow a little bit. And then George, nice job taking those pictures. And now I know that you can. I love it. And then Tony posted, let's see what Tony did over here. Guys, this is the classroom. We're going to talk about rules, and then it's up to you to give me stuff to talk about, posting pictures. Tony, 50-50, perfect entry, creates a manageable trade. Quick profits at the area that hasn't broken but has the potential to. Divergence with ugly triggers. You exit the trade break even. Tony, picture perfect. Go right ahead. It's not DHL? Great question. So let me share my window of opportunity pictures. And it's fun because you just call it the woo, right? So here's a short. Reversal bar prints. When you're looking for the window of opportunity, David, you're looking from the bottom. This is a short, right? Everything's down. From the bottom of those small triggers to the top, you can see the red box. You're looking for those areas to be inside of those large triggers. Does that make sense? Top of the triggers, bottom of the triggers, they're overlapping. We're looking for that area for bounce to be inside of those triggers. Same thing from a long. The triggers are up here to down here, and it's those areas inside that give you the highest chance of success for that trade. And I'll give you a couple examples, guys. Steal these pictures. Anytime I post a picture in the room, please feel free to take it. Did that answer the question, David? And here we see it again. It's the areas inside of the triggers that give us that highest chance of success. Ultimately, David, you're going to get so good at recognizing advantages that you may add this one into your arsenal. But it's understanding the momentum and the clear path that gets you to being able to take this one. Great job, though, on the questions, on the pictures. Tony, perfect execution on a 50-50 trade. Guys, when the area hasn't broken, when it still has that potential, managing assertively tends to be your best course of action. Really well done there, Tony. And then DHL, you chickened out. I don't think you chickened out at all. I think what you did is exactly what Tony did. 3 divergences in the same location may terminate the trend, right? You gave away the advantage of a clear path. I think it's a good read. I think it's a good exit. But more importantly, David, I think your entry is amazing. That is probably the best entry you could ever take. Stop keeps you safe. This third divergence lets you know that things are changing. They're just like the yellow one-to-ones. The only difference is they are from smaller swings. And David, you may not have ever heard me say this. So guys, I'm going to give my full confession right now to the classroom. I'm not a tech guy. This feels like algebra to me. It really does. But that's what it is. It's an area, but we're not using these pink one-to-ones for entries. We're not using these pink one-to-ones. They're just small swings. They give you an opportunity to see where the market may bounce just a little bit, but you're looking for those rules to be met. But that's how they're formed, David. And then if there's technical questions to go with that, I always encourage you guys to go over to the trading room and post those technical questions. There's technical guys in here. I'm a chart reader. I'm looking at indicators more than anything else. And I'm reading those indicators and teaching you to read those indicators. But there's the what they are, David. They're just like these yellow ones, but in a smaller time frame, smaller swings, smaller pivots. Ziba, you have odds favorable, right? No, you're not losing. That's odds favorable momentum. That's a beautiful look, Ziba. Rule number 1 is met. Rule number 2 is met. David, I don't believe they are. I think that they show you on a small chart, on that tiny chart, they give you opportunities to recognize where that market may stutter a little bit. When they line up with key areas, that's when I pay attention to them more. Does that make sense? When these pink dots show up next to a blue fib, absolutely. But if they're just hanging in the middle of nowhere, it's not quite as important to me. Ziba, perfect entry, great management, quick targets. Third divergence. Third divergence, right? You could have exited that one a little bit sooner. No reason to lose. Moved your stop. You got stopped out way up here. Why was your stop still up here after a third divergence? Are you using the very mechanical? You looking for 100 and 200? Yep. So you should have been break even. This stop should have been at 47, right? Break even, $100 on the trade, out break even, especially after that third divergence. It looks like you moved it. Well, if you're already out of the trade, you can't move your stop down. So once this profit target's hit, if you're using that very mechanical, you should have been at break even. I don't think you did because your stop is up here. Did you click the line once and hover it right here, but forget to click the second time maybe? Because that looks like the original stop. Okay. No worries. But you do see that this is not break even, right? So your computer, your software messed up, your NinjaTrader messed up and got you out up here instead of break even? Because then it may be a NinjaTrader issue. But it looks like, just from where I'm sitting, and I believe you 100%, from where I'm sitting, your stop was in place at 54, or yeah, 53-ish. Which wasn't break even. So maybe it was just a little mechanics thing that got you there. If I go to move my stop to break even, but I haven't clicked again and the market goes above it, it's going to hit my original stop. Does that make sense? Like if I don't move it soon enough and I click that line and I'm like, okay, I'm going to make it break even, but then the market's above it, it won't let me move that stop. It's going to go and that stop's going to get hit where it originally was. Maybe that's what happened there. Because I have done that when the market moves a little faster than I do. which happens every now and then, right? All right, Mike. Guys, I'm going to warn you right now. Mike, this doesn't do anything for us, right? I'm going to assume that you had odds favorable momentum, no, you're fighting direction, you're fighting triggers, fighting areas. Guys, Mike's been with us for 10 years. Mike, those don't do us any good without a full view. Those don't do us any good without some sort of rules written on there. Those are great for the traders chat, for you guys that are more advanced. But here, guys, we need rules on charts because this is an educational room, right? 50-50 entry, right? Thala, you are so late on that one. But you make a little money, right? Everything says up, everything is strong. Guys, great entries make for much better trades. Thala, I would have liked very much. These are the ones that drive my brother nuts. And it's funny. And he does it for a reason. I want you to see this. Thala, are you with me in here? And guys, this is for everybody. Your best entry was here, wasn't it? Like, that's it. Termination condition, full reversal, 50-50, strong triggers. Holy smokes, look at everything. Give me a Y in the room if you see it. Thala, if you're listening, help me out here. Let me know that you see this. Guys, your best entry was down here, right? The triggers are the strongest. Everything says go. When you take an entry, small triggers are returning a little bit there, right? But that's your entry there. No worries. It's okay to not take a trade. Because what did you do here? Your stop, and guys, you can trade however you want, but your stop is all the way down here, right? Yeah. So now you've increased risk exponentially. You know that there's trouble here. You know that this area isn't broken, and you know that those triggers are weak. You're creating a scenario where your fear of missing out creates a very difficult to manage trade. And it's on sim, it doesn't sting, right? But the second you go live, it's like there's cameras watching you. That's when this thing just goes boom right against it. And because it wasn't manageable, your stop is so big, you're taking these huge losses on medium trades. And that really adversely affects the P&L pretty dramatically. So one of the things that John Novak likes to say, guys, don't miss the perfect trades, right? Yep, you had a 50-50. But do you notice how, so on a 50-50, what advantage are you giving away, Thala? Clear path, right? We don't really have a clear path. We have the potential for a clear path. So when your small triggers are inside of the large triggers, they're down, they're against you. Your large triggers have actually turned red against the trade. You're giving away the clear path and you're giving away momentum. And here's one of those cool things that we talked about with Dave B earlier too. A little bit of patience when things aren't right. Look how it stabs right back to that mid band. Every trigger line is now up again. Exact same price with 13.2. Well, I'm saying if they're not, don't we have anything can happen? Does that make sense? You've given away the advantage of momentum. Yeah. So we don't have a clear path, and now we're giving away momentum. Do you see how the advantages that you can have start to go away? Does that make sense? Isn't it always better to have momentum than a loss of momentum? That's like saying, hey, Mark, what's better, to have $1 million or to not have $1 million? Yeah, let's go with the $1 million, fella. But yeah, but you see how this one is so strong on your 5-1? And boom, that thing rockets up. I feel the momentum was not great, because of rule number 1. Let me go to my picture because John changed his pictures and I think that I need this picture. Are you ready? And this goes back to the looks are the same on every chart, right, guys? Strong triggers are strong triggers, whether it's a 13.2 or a 5.1 or a 34 or an 8 range. This is my best look, Thala. Smalls above the large are wide, they're angled in the direction of the trend. What happens when they return inside? Anything can happen, right? Whether it's a 13.2 or a 5.1. It is. So you're looking for the... Oh, I love this question. These are great. So let me see if I can break it down. So Thala, we're looking for momentum. No, I know exactly what you're doing, and I think that you're doing it beautifully. Guys, I'll never get upset with questions. So 13.2 gave you momentum, right, Thala? Yeah, absolutely. 13.2 did not give you a clear path, did it? Because it's a 50-50. You have the potential for an area to break, but it hasn't broken yet. So let me get back to your picture. Yeah, so it's 50-50. So you've already given away one advantage. Would you agree? So now we're looking for 2. Well, if you've given away the advantage of a clear path here, what happens is on your 5.1, you don't want to give away advantages in the beginning, right? There's no reason to compound the problems. So weak triggers, especially turned against you on the 5.1, compound the problem of not having a clear path. Does that make sense? Cool. Yeah, so if you look at the first potential, look at that strength and momentum in the 5.1. You're not compounding the problem of a 50-50. But here, it becomes a little problematic on the smaller, faster. And ultimately, it looks like it goes up. So when you've got the disadvantage of momentum here, if the momentum and you have a clear path on the 13.2, the 5.1's not going to affect it that much unless it's 3 divergences in the same place. But when things begin to go wrong on the larger chart, ideal conditions on the smaller chart help very much with the scenario. Does that make sense? I think this is a great question, and it didn't feel like a debate at all. If this can't be perfect, then let the 5.1 be perfect. And here's a picture that kind of shows that. Always let the 13.2 lead the way, Thala. Always let the 13.2 give you the odds favorable, right? And then if you give away an advantage on the 13.2, it's okay to let your 5.1 be perfect. That's when, because remember, we're managing assertively, right? Managing assertively on that 50-50. So you're creating these advantages here, and if there's tons of momentum and there's no divergence, it has a better chance of pushing up far enough to give you an opportunity. I just gave you a picture right above you. So here's 2 of them, and this is on 50-50s, right? This is looking at that medium probability trade, because medium probability trades, I think I just had an aha moment. Let me go to the glossary of common terms. Medium probability trades have to be managed assertively. So if that momentum on the 5.1 is likely to give it at least a little bit of a push up. Whoops, I thought that was a picture. That was my email. If that no divergence on the 5.1 is going to give it that push up and give it the ability to continue with the momentum down, I've got a better chance of creating more room to be able to manage assertively. Awesome. Thala, that was an amazing question. There was so much information on that chart. I love it when you guys post it. Thank you so much for that. Guys, it's 11 a.m. I am going to take just a moment. Yeah, well, it's about advantages, not even safe, right? Everything that we do, your best chance of success, yeah, comes from advantages. So the more you have, the easier life becomes. There's crude oil trading in determinations, guys. There's that S&P working its way down. I'm going to leave you with the S&P for just a minute, guys. I'm going to take a minute. And then when I come back, the last hour belongs to you guys. Me too, fella. That helps a lot. The last hour belongs to you guys. So all of my new guys, my Matts, my Miers, my Zebas, my Davids. Who else is brand new in here? Guys, post your questions. Ask your questions. And then we're going to keep going through your charts. We still have quite a few. You guys are keeping me busy. Absolutely love it. We're going to come back and we're going to finish strong on all these great pictures. If you take a trade, post it. If you don't, feel free to take a picture. Tell me what you're looking at. I'll be back in just a minute, guys. All right, y'all, last hour home stretch. Here we go. What are we looking at right now in the S&P? Price has reached support. Absolutely no trigger lines have broken through. We are at a textbook termination condition, right? This area will either hold, the market will roll, it'll head back up, or this is an area that has the potential to break. Ultimately, if those trigger lines get below, in a holding pattern. Just waiting for the best of the best, guys. Always waiting for those advantages to be present. Notice how odds favorable momentum into the area. It increases the likelihood that it breaks as we hit that next key level. There's still a little bit of momentum, and it carries all the way down to support with anything can happen triggers. You can literally watch the advantages dwindle as you go down. Guys, I'm going to keep scrolling up. I'm going to see where we're at in pictures. You guys are keeping me busy today. Thank you so much for that. Andy Trader, always good to see you. Let's see what you did today. Andy Trader says, with the smalls breaking above the large and the large going up, he'll take an entry at an area of support inside of favorable large triggers. In at 52, out at 56. What a really easy $300 trade. Andy, great trade. Nice job. David, let's see what you had. So David, same question. Is the mid-band within the large triggers a good entry point? Not after 3 divergences, right? You've given away the advantage. Your large triggers are up, your synthetics are down. The market may go down, but you're giving away advantages there, without a doubt. And I know that we talked about writing rules on charts after you posted this one. Guys, remember, you have odds favorable, you have no termination conditions. You took your best entry, and then when divergence changes the whole scenario, it becomes a lower probability scenario. Tony the Tiger, he trades great. 50-50 trade. Your 5-1 is messy. There's your entry. Profits, profits, third divergence, exit. Nice job. Great management on a medium probability trade, Tony. Guys, I'm telling you, medium probability trades are going to be most of what you do. Your ability to read charts makes these trades manageable. Gary, picture perfect. The beginning of acceleration, absolutely no termination conditions. Guys, look at this entry. After the first reversal bar, Gary had 3 ticks of risk on this trade. 3 ticks. And makes money all the way up. Gary, nice job. Everything we look for in a high probability trend trade. Claire. Support holds, resistance holds, support holds. Claire waits for everything to roll and takes continuation. A little more advanced trade, guys. This revolves heavily on chart reading. Claire, you did it beautifully. And that was aggressive. Triggers roll. That pullback on the test is almost the exact same price, Claire. Have you noticed that a lot? You can get in aggressive, and then when momentum shifts, there almost always seems to be an entry at just about that exact same price, doesn't there? I've noticed that a lot. So much so that it's bought me a lot of patience. And Claire, I know that you're there, but let me share this with the rest of the class. I'm going to show you the difference. And Abdul, this is good for you too on those edge trades that you're trying to take. I think resistance will hold, guys, as it comes up into it. This price right here, when I form the opinion that resistance will hold, is the exact same price more often than not, or within a couple ticks, when the trigger lines tell me that it's held. The market is a fight, guys. It is a fight between buyers and sellers. It's a fight between deep pockets. When the buyers are in control all the way up to key areas, and guys, they know where these numbers are the same way you do. Let me make that a little more legible. all the way up to that key area, the sellers fight back. It's rare that there is a one pivot reversal on a smaller, faster chart, guys. There's a battle between buyers and sellers, and the buyers fight back to that key area, and the sellers push a little bit more, and the buyers push a little bit harder, and the sellers try, and the buyers push even more. And notice that the trigger lines roll. Notice that the smalls are on the other side. Notice that your small chart has changed direction. Guys, the sellers push back again. It's typically a little deeper pull. And then everything pulls back to an area inside of favorable large triggers, and that's when the sellers have won the fight. You guys can see this. You know where this area is because you have Nexgen software, because you can see these key areas before we ever reach them. A little bit of patience typically gets you almost the same price. And it's that being patient, waiting for the roll, that keeps you on the right side of the fight, guys. I hope that helps a little bit. Almost every new user wants to be first, right? I did. I always wanted to be first. Because what if it goes without me? The idea of not getting paid on every move in the market is terrifying to new users. You don't have to. Abdul, let's see what you did. You're going short. Don't have the advantage of momentum, for sure. Smalls are inside. Larger down. Interesting entry. 4 divergences. You let it roll, and you took the entry right at the mid-band with the small triggers. Don't get caught in the fight. I like it. That's that continuation entry. And then there we go, and it works its way down. So Abdul, this almost illustrates, doesn't it? Let those divergences work out. Let those small triggers roll. Let that area clear. And then you took the perfect entry. And then, yeah, you certainly could have held much longer with that one. Let them fight it out. Let it get to the other side, guys. You don't have to be in that fight. I think you did a great job, great patience. And as you get more comfortable with this one, I'm not sure. As you get more comfortable with this one, you'll be able to hold those for bigger moves. All right, Paul. Sorry it took a while, but we got you. Smalls above the large are wide. Paul, you take the entry after 1, 2, 3, 4 divergences, and you get quick profits, out break even. Nice job. That was the trade right there, Paul. You guys see the difference? And this is for everybody. If you miss this trade, you're more inclined to take this trade, right? Where things start to get a little rough. Those areas start falling below the large triggers, outside of those favorable large triggers. You've already had multiple divergences in the same location. As that was 3 divergences in the same location. And it sure enough pushed that market down. When you miss the best ones, you're more inclined to take the not so best ones. And guys, this is everybody. A lot of what I talk about a lot of these patterns, these things that new users do, guys, I know these because I've been a new user. 50-50, no divergence, perfect entry. It's not a good bottom, but, oh, that magical word, right? Not a good bottom, but I'll do it anyway. 50-50 from not a good bottom and what's been a big downtrend, and that 50-50 doesn't work out. Abdul, how many times have you seen this? Pivots from beyond the areas, get up to that mid-band to resistance, that 50-50 look, and that 50-50 trade doesn't work out so well. On a 50-50 trade, I have found that your advantage goes up when that market comes from a great termination condition. Gives it that solid foundation. And this is not a pivot stop out, right? And this may be just a little language. So what this is there was a pivot with divergence over here, and we didn't quite make that pivot, right, Abdul? Do you see it? Stop short with the divergence. So in order for that to be a pivot stop out, and we'll go to rule number 2 in the instructions. In order for it to be a pivot stop out, price needs to reach that area. It has to exceed that area a little bit, and then the trigger lines don't follow. Make sense? So one of the things that you'll see a lot is when price doesn't make that next key area and pulls all the way up, it loves to finish the move. And now here, it's reached support, right? It made it to that key area, and now we have odds favorable momentum, and it's a 50-50 look. And you guys are probably asking yourselves, well, if I get a pullback without divergence to an area of support inside of favorable large triggers, is this a 50-50 with a better chance of survival because it's coming from a termination condition? Absolutely. So we can create that window from the highest point of support to the lowest point of support inside of favorable large triggers. And this becomes the area where the market is likely to continue based on the advantages present on the 13-2. Based on the termination condition, based on the odds favorable momentum, based on the potential of 79.95 to break because of all those scenarios. And we'll see what happens. One thing that you will learn that's very true, guys, is I don't call trades. The only thing I do is I talk about whether or not the rules are met. Do I have advantages present? And if I do, I'm obligated to take a trade. Anything can happen triggers, right? 2 divergences, small triggers inside. Thala, do you see? This kind of goes back to the talk that we had. If you're giving away the advantage on the 13-2, don't give it away on the 5-1, right? We've lost the advantage of momentum. And now we've lost it on this chart as well. And look how that doesn't work out. These areas don't fall inside of favorable large triggers. That little adherence to the rules in the beginning, guys, is going to have you recognizing these things almost instantaneous. And I had someone tell me once, you'll get to the point when you can recognize your trade rules being met inside of 10 seconds, you know you're comfortable. All right, so I gave you guys the checklist today already, right? Does everybody have that? Does everybody have that high probability trend trade checklist? I'm going to put it in the room one more time, guys. This is how you're going to police yourself. Every time you take a trade, make sure that it fits. Guys, I print this out and put it on my desktop. My trading plan has checklists associated with it, and if I can't answer yes, I've got to learn to sit on my hands, right? Well, this checklist comes from, and Matt, this will be a good one for you. George, this will be a good one for you. One of the things that creates a huge advantage for you, Thala, yep, it sure should. Dang it, now you guys know I'm human. It's open. It won't let me change it, but I changed it in my, dang it, now my OCD is in full effect, Paula. I love that. Guys, don't ever let me get away with anything. If you see something, man, no, don't be sorry. That's awesome. Here we go. Guys, everyone else gets the high probability trend trade misspelling, and then Thala, there's one for you with the correction. But guys, all it is, it's that set of rules, right? It says this has to happen in order for me to take a trade. One of the things that I want new users to do, I had a trader that I respect very much that's been with Nexgen for about 17 years. And he said, he goes, if you don't have a plan written down, you don't have a plan. And guys, if you don't have a plan, you open yourself up to emotion, to opinion. Your plan should be pragmatic. It should be back-tested. You should go and prove to yourself that these rules work. Guys, don't take my word for it. I'm going to teach you how to study. You're going to go back and do everything in your power to prove me wrong. To go, you know what? That Novak character is full of beans. This will never work. And the reality is that if you go through and you do that, you're going to be with me forever. That's just how it works out. I love it. If you go back and do the work, guys, you're not going anywhere because you're going to see that it works. But everything that we're doing, I liken this to eating an elephant. And the only way to eat an elephant is one bite at a time, because if you try to eat an elephant, it's overwhelming. If you've ever tried to lose weight, I was a personal trainer for years. People would tell me that they want to lose 50 pounds, and I would tell them, why don't you just lose 1 pound a week and let's see where we are at the end of the year? Because what happens is it takes that overwhelming feeling from it. So your first goal, your first bite, is identify your entries. You're going to take 20 days and not worry about anything but entries. And your trade is the high probability trend trade. And in order to enter, well, Matt, there may not be one. But let's see. Actually, this is a perfect example. So let's go through the whole process. What do you say, Matt? And let's use the checklist on it. Did we have a termination condition that reversed the market? That's a yes. Matt, do you recognize odds favorable momentum? And guys, if I call your name and it makes me uncomfortable, tell me. But sometimes I'll just talk to you like we're best friends. I get close to people quick. Odds favorable momentum, Matt, what do you think? Smalls above the large are wide, they're angled in the direction of the trend. Can we agree that this is a market that has the potential to continue? Absolutely. Price did not reach an area, correct? Since price hasn't reached an area, we have a clear path. Both the small and the large are above here. Rule number 2, Matt. Cool. So watch this. This is how I find my window of opportunity, Matt. As I turn my attention, whoops, wrong one, from the highest point of the triggers to the lowest point of the triggers. Does that make sense? So the first thing I do is I'm looking for nothing more. Get that off of there. I'm looking for nothing more than where are my large triggers. And I don't know why that's not. Oh, because I'm doing the wrong one. There we go. So here's my large triggers. And watch this. I'm done on the 13-2. Bonk. Now, what are my areas inside, Matt? From the highest point of support, that's it. I just have a mid-band. That's crude. Rules are the same. I had a mid-band inside of favorable large triggers. This is crude, yep, but it's the exact same process. It's the area that's inside of those large triggers. So let's go to the ES and see what happened. Do we have odds favorable, Matt? Absolutely not. My large are down, my small are up. I don't have odds favorable momentum. The background is green, but aren't all of my trigger lines below resistance? So I also don't have the advantage of a clear path. So rules 1 and 2 aren't met just at first glance. I don't have that best trigger look with the trend. And I also don't have a clear path because all of my trigger lines are below this resistance. So you're having trouble finding the entry, Matt, because there really isn't one here. Yeah. The rules just aren't met yet, but we can play if then. If these small trigger lines get above resistance, if these large trigger lines roll and we get that odds favorable momentum, if these large trigger lines roll and then an area falls inside of it, well, then we have a potential entry. But right now, all we're looking at is a market not giving us the advantages yet. Hey, Abdul, thanks for being here. Thank you for always posting pre-trades, post-trades. I appreciate it. I hope you got a little something out of the class today on those edges. Does that make sense, Matt? 90% of what we do is going to be sitting on our hands, waiting for the advantages to be there. And I thought it was pretty good that crude oil gave us the example of what it looks like when it's really good, right? If I got in at 80.10, that's $300 worth of profit right there. And that's a rules-based trade. And it all starts over here, yeah. And I can't draw on these charts because for whatever reason my computer hates it. I don't think I have the graphics card for it. But let's go through this picture real quick. Odds favorable, no termination, pulls right back to support inside of favorable large triggers. And it actually does it twice. So if you miss the first one, you get the second one. And then we can use Fibonacci up here with all that momentum to help determine where that market is likely to go. And the cool thing is it all started with a termination condition that creates a full reversal. As this is 100% your best of best. So Thala, you'll have to go, if you blew it out, you'll have to actually go to Apex and log in. And then once you log in, there's a place for you to reset. And guys, remember, I'm not an Apex expert. I don't work for Apex. But John Novak put an Apex section on Discord. Let me figure out where he put it. I have so many posts from him. There is a whole section on Discord now about Apex. And I'm not sure where he put it. I'm going to find it and I'll get you guys a link. But Thala, you're going to log in. And again, that's an Apex question. Resets, I think, are $80 on Apex. But they were having a sale where it's like half price. $40 today. There you go. Awesome, Jose. And guys, Apex is great to test your plan, right? You write the plan, you're testing the plan. You're testing your plan. So just log in, Thala. And the first thing, here's your subscription. There's a reset button right there. Once you log in, it'll talk about your subscriptions. You have to reset right there. Oh, and I think Claire just gave us the link. Thank you, Claire. Matt, did that help a little bit? And then there's Jose catching it, right? You have one of those ghost fibs. That's your 23 fib. You will. You're day one, Matt. By the end of next week, you'll be amazed. Miel, and I hope I'm saying that right. Repetition. Repetition is the best way to learn anything. Repetition, over and over. So if you're not comfortable with rhythmic, just spend time with it. Go through it. Look at it. We're looking at NinjaTrader 8 on my charts, yes. This is NinjaTrader 8. And guys, look at that. This is perfect, isn't it? Everything about it. Let me look at Tony's pictures real quick. Tony took the trade, didn't he? Odds favorable. Beautiful entry, makes some money. Gets out, gets back in with the rules met, and we know that it went right up to resistance. Nice job, Tony. Work those entries, man. Work those areas inside of favorable large triggers. Makes them more manageable. More opportunity for profits. And then Joel. Black screen. While that comes up, let me go back to what I was talking about, guys. Here's an example of writing a plan. This is what it takes to get me in. Your first 20 days are nothing but entries. Finding the best of the best entries, learning to follow rules, practicing the correct rules, posting every picture that you take into the room so that we can talk about whether or not the rules were met. And you're going to take pictures, guys, all day long. You're going to take pictures of everything you see. Every time somebody posts in the room and I say, hey, look, that's a high probability trend trade, just like Joel gave us right here. Odds favorable, no termination condition, pulls back to the mid-bands. Guys, take these trades. Joel, I'm putting you in my spreadsheet. And then open up that spreadsheet that Nexgen gave you. And this spreadsheet has a whole section where you can put your favorite looks, your best of the best entries. This is my personal spreadsheet. And every time you guys give me a perfect trend trade, I steal it. Joel's perfect trend trade long, right? Now I can go back and I can study that picture every time. How do I know it's perfect? Because it follows the rules. Guys, you're writing a plan for what it's going to take to get you to pull the trigger. Once you do that, once you've got your entries down, and it'll take you 15 to 20 days to get comfortable with the entries. So Matt, you're day one and getting the hang of it. You're doing great. Give it a few more days, right? Get in there, get comfortable, practice it, look at it over and over, and it gets easier. The spreadsheet that was provided to you guys has somewhere where you can practice everything that you do. Every time you take a trade, every time you pull the trigger, put it in the spreadsheet. Track what you're doing. Look for those patterns that make you successful. If I tell you something in class that you didn't annotate on your chart, go back and re-annotate your chart. Totally cool. Every time I see my rules met, guys, I put it in this green section. This is 100 and... Ooh, that's math. That's 137 pictures of high probability trend trades and medium probability 50-50 rules met trades, guys. You ready? Here's your second gift or third gift. I gave you the checklist. I gave you the example of how to write a plan. Guys, here's my spreadsheet. Steal it, download it, take it. So Matt, Mia, everybody, all you guys that are trying to get where you want to be. George, here's your homework tonight. Click on each of these links. What's it look like when the rules are met? Burn that image into your brain. Watch this. I'm going to click perfect short. What's it look like? Odds favorable, no termination conditions, pull back to the area inside of favorable large triggers. 100% textbook. I'm going to click perfect long. What's it look like? Odds favorable, no termination conditions, perfect pullback to an area of support inside of favorable large triggers. I'm using repetition to build confidence, to build trust. Does that make sense, guys? Steal this spreadsheet. Nexgen gave you one that doesn't have 140 pictures on it. I'm giving you my personal one. Study these, practice over and over. And then Miel, does that make sense about rhythmic? But guys, if you're brand new and you're using Apex and you're not sure about stuff, since I'm a man, I'm not gonna lie, guys, I put together a grill and I have extra parts. Just go to Apex's, go to their website. Don't be intimidated. It's not gonna do you any good, right? So go, like, you're trading 8, right? So Miel, when I take a trade on 8, the only thing that rhythmic is, it's a backup. If something goes wrong on 8, let's say that 8 crashes, or for some reason I can't close a position, you're just gonna have your rhythmic running in the background, right? And you're like, oh my gosh, I can't get out of this trade. You'll be able to open your rhythmic and close the position. And that's it. That's all you really need it for. And then you can look and see where you're at. No, I take them on 8. I take them on my chart trader on 8. Every time I enter a trade, it's just like this. Yep, for the evaluation. Just like that. If I'm on my Apex account here, then I just take it normally. The only thing I use rhythmic for is if there's some sort of challenge. Maybe an order hangs, maybe it doesn't close, maybe I need like this emergency, oh my gosh, let me get out of my positions. But everything that I do, all of my execution is on 8, 99.999% of the time. And then rhythmic is that backup. Rhythmic is the data. Good. Don't know. I don't know the answer to that one. You're talking about the trade copier, right? Where you have 10. So you're executing on 1 and the trade copier is executing on the other 9 for you. If you follow that link that Claire just put into the room, let me copy the link. John Novak talks about it there. That is the new, and let's go, guys. And this is what this classroom's for, guys. I'll give you every answer that I have. But here's your Apex. Here's a lot about the trade copier. Here's what you need to trade multiple accounts. Check it out. No, it's not off topic at all. But this will get you those answers. And guys, this is one of the things that I promise you. If I don't know the answer, I don't use a trade copier. So I've never done it. But I know where to get the answers. So ask any question. All right, so Matt, we're back to the ES, right? Now we're starting to get some momentum. I use NinjaTrader 8. I have an Apex account. But I just use 1. I don't need to pass on 12, right? I can do it on 1 and then I'll start adding accounts. Everyone always asks me, well, Mark, aren't you trading? I am. Guys, I don't trade during the best hours because I'm teaching you how to trade during the best hours. I trade, I look a little bit before market. I look a little bit after market. But the reality is when the meat and potatoes is going on, I'm teaching you guys how to read indicators. And that's why I teach this class. John Novak did it for 20 years. So I took that off of him so that he could be a full-time trader. By the way, today is his and Melinda's 30th anniversary. If you're over in Trader Chat, wish him a happy anniversary. All right. Matt, are you with me? We got that odds favorable momentum, didn't we? Smalls above the large. The larger starting to widen up, they're angling. It's 50-50 at best, guys. Right? The smalls are above, but the large are below. And we're not coming from a good bottom. It's just a pivot from beyond the areas. That mid-band is the first target. This is where the market's likely to go to, especially without any divergence, not coming from an area. The fact that these large triggers are still all the way far away creates like a vacuum. As we start to get into this area and the large triggers don't follow, not yet. I would need that solid blue line, Matt, to be right here. So let me show you what a good bottom looks like. That sounds funny. There's that good bottom, Matt. Look at that. Price hits it to the tick. Isn't that amazing? None of the trigger lines break through. I get that full reversal, and then off it goes to the best of the best. If we're looking at the S&P, I'm way beyond that area, right? I actually had a clear path. So since this isn't coming from a key area, it's pushing up, absolutely. The market goes up and down. But look what the market's been doing. This mid-band area becomes a potential bounce point. Because these large triggers are below this reversal bar marker, it's even more likely to close that gap back to the large triggers. This is what we call the gap theory. And you can use it for termination conditions. And let me share what it is. If price pulls away from the synthetic triggers too fast, too far, it reaches a mid-band, it reaches Fibonacci areas, it's likely to snap back to those triggers. So as we're coming through and we're looking at it, it's reached that mid-band area, not to the tick, but it's in that area. And the large triggers absolutely refuse to follow. What happens quite a bit when this happens is it looks very much like this. Price reaches those key areas, the large triggers don't follow. Any short trades, even with that odds favorable momentum, tend to get run over in that area. Same thing here, price reaches resistance, the large triggers don't follow. You're going to see price more often than not snap back and close that gap. And here's a great example of it right here, guys. Price reaches that mid-band, you can't see it, it's kind of off camera. The large triggers don't follow. What seems to be a perfect short trade with odds favorable momentum gets run over as price closes the gap back to the large triggers. And you see this a lot when it's not coming from a solid bottom, when it's not that good, solid Fibonacci-based termination condition. And you see it here, Matt, same thing. And everybody, of course. This pivot's not from a key area, right? It's a bad top. It accelerates all the way back to that Fibonacci support. Look at how the large triggers don't follow. Price snaps up and closes that gap. And even from a good top, it reaches support. Large triggers don't follow. Price accelerates up and closes that gap. And this is a pattern that we see quite a bit. Price accelerates away, mid-band area, large triggers don't follow. It comes back up, closes that gap. And you'll see this over and over. Price accelerates, large triggers don't follow. It closes that gap. So this becomes just a chart read, nothing more. When those large triggers don't follow, when they stay below that reversal bar marker, longs are less apt to work. Does that make sense, guys? This is just a pattern. This is a pattern that you see on every chart. That desire of the small triggers, or of the large triggers and price to collide is the exact same thing. Where are my pictures? Is the exact same phenomenon that has us looking for that snap back to the area inside of favorable large triggers. Pretty cool, right? Patterns repeat themselves. Every chart, every time frame, every market. Because this could be Crude, well, this is crude oil. It could be the S&P. It could be Tesla stock. It could be gold. It could be natural gas. It could be soybeans. But the patterns are the same. So the idea is to learn the patterns and then apply them to finding trades based on the advantages. That was a lot of talking, wasn't it? Sorry, Matt. So on the ES right now, the 13.2, the large triggers can get above that blue line. Not more advantages in momentum, but it would give us a clear path. If those small triggers and the large triggers break above this area, well, then we have a clear path to the upside. Right now, we have momentum, but we have an area with the potential to break, but it has not broken yet. Does that make sense, Matt? We go back to that equation. First, we get momentum using the trigger lines. Then we get a clear path using the areas. And then we look for the entry. So if you're looking for entries, did it, Thala? You're extra cautious now? Simulator gives you balls of steel. Pardon the crudeness of that. You don't want to be a simulator millionaire, guys. And this is why, here we go. Great segue again. Thala, you're teaching the class tomorrow because you're doing great today. You are setting me up for so many great lessons and ideas. Thank you. All right, guys, this is the last thing that I'm going to share with you. John Novak and I got together one Sunday morning. We were both doing market replay. We're talking on Skype, and we're like, how do we kind of outline the path for these people in like one page, keep it focused. This is it, guys. To minimize your learning curve, post pictures in class. This has been, for as long as there has been an online class, this has been the recipe for success. Every trade you take, win, lose, or draw, if you win and the rules are wrong, you may have short-term victory, but long-term failure, guys. If you're practicing and you're taking trades that don't fit rules, that don't have advantages, but you win them anyway, you're creating this false sense of security. You're building a muscle memory to break your rules. How are you going to know the difference? Well, you need feedback from us, from me. 15 hours every week, live. I'm here to talk about everything you do. Every picture that you post in the room, I'm willing to have a conversation about. So you get the feedback. We're here to help. If you place a trade on the simulator, you stick to that monopoly money, right? Don't have the fear of losing as you're learning a pattern. Participate in class. Guys, there's no risk of loss or capital. It's all learning. You need someone to tell you what you did right or wrong when you're new, guys. That's me. That's my job. That's the educational magic that Nexgen offers. And this is always my desire for you newer users. Your first couple days, you're not going to be a professional day trader, but you're at least going to see how we teach. You're going to understand that the methodology works through repetition. You're going to see that we're here for you from start to finish. You're going to recognize that Fibonacci identifies turning points in the market, that momentum creates advantages. You're going to understand that these entries happen every day on every market. And you're going to know by the end of the first week that this is something that you can do without question. Guys, use the outline for education. We're just going to go through this whole sheet. Fastest path, right? Learn the rules for when it's okay to trade. Guys, I'm here start to finish to teach you those rules, to confirm your ability to understand them. Simulate your trades. Post your pictures in class. Don't practice the wrong trades. Simplify. I can't embrace that enough. I can't say that enough. Talking to you, engineers. Simplify. Let it be easy. Right? 2 charts, 3 rules, 1 look, 20 days to learn to read those charts. Guys, the world's your oyster once you do it. Go back and do market replay. You can double, triple your repetitions through market replay. You can trade the market as though it were live, even when the market is closed. I agree. Thank you for that, Ron. You know that I learned all this stuff in the same room. I just wasn't teaching it. I was a student like you guys. John Novak was teaching the class. The only difference is I won't private message you and call you names. Guys, fix your mistakes on market replay. If you skipped a trade, take it on market replay. If you held too long after 3 divergences, fix your management. Take pictures of the correct trades, and guys, repeat this process every day. I did. I said thank you. Thank you, Ron. I don't take compliments well. And then once you guarantee yourself you can win, guys, trade live money. Use your checklist, right? How do I know if it was right? Well, Mark gave me a checklist with every rule. Let me give it to you guys again. Nobody takes it the first time. It's like me with compliments. Make sure that you're following the rules. Make sure that you have all those advantages. And then post your trades in class with your entries and exits, with your rules annotated on the chart. How to annotate. Here's a picture. Tell me what's going on. Tell me why you're doing what you're doing, guys. This is your path. Insert the trades into the spreadsheet. Every time you take a trade, guys, you're creating a database. All those perfect trades, working on it, all your favorite looks. You're building that repetition. You're building that confidence. And remember that your entries are your first bite of the elephant. Once you are comfortable with your entries, you're going to learn to manage them. That's the second bite. A mechanical approach that eliminates emotion or opinion tends to be the most straightforward approach for new users. And you can alter your plan after you're done with the education, right? When you learn to read indicators quicker, more efficiently, you'll be able to manage quicker and more efficiently. But in the beginning, if you trade 2 contracts, guys, you can let your initial stop be 12 ticks and then move it outside of that window of opportunity. You won't move your stop again until you get a reversal bar. Simple concepts. Outside of the window, once you get a reversal bar, move it above the reversal bar. Your targets are at 100 and 200. No opinion, no emotion, no anxiety. You don't have to hit a home run every day, guys. 4 singles gets you on base. And that really is true, Claire. When you guys do well, I'm like a proud papa. I get giddy watching you guys do well. Once the first target's hit, go break even. Why do we do this? I had someone ask me once, Mark, why on earth would you risk $120 to only make $100? Because for your first 20 or 30 days, guys, the only thing that I care about is entries. That's why I'm on Simulator. I'm not trying to get rich in week 1. I'm not paying for this software with my winnings. And when I hit $100 and I take that money and I bank it and they can't take it back from me, dopamine, boom, huge dopamine kick. I'm excited. I feel good. I just want to trade. Hell yeah. Pop the champagne. And now I'm at break even, which means that they can't take that money back. I have zero risk trying to get to my next target. Guys, the only reason that we do this is because if there's no risk on the trade, it's easier for new users to take their hands off the mouse, to roll back 6 feet from the screen and just let it play out. And you're either going to make that 200 or it's going to hit break even. And guys, I'm going to be super honest with you. You're going to have a lot of break evens in the beginning. You're going to have a lot of $100 trades with break even second contracts. But every trade that you take, every time you take a perfect entry, it creates an opportunity for you to build a management plan because you're reading the indicators, you're looking at it, and you'll start putting pictures. Guys, I took a high probability trend trade right here. Smalls below, larger wide, area cleared. I love my entry. I took quick profits on the way down. And then once I got profits on the way down, I looked back at my 13.2 and it said, everything says down. You have momentum and nothing in the way. Hold for a bigger move. And guys, this one went to the bigger move. DHL, David, are you using Snagit or are you using Capture? Snagit. So here's what you need to do. If you're using Snagit, take a picture. Take a picture of your checklist, right? and it goes into your library. And then all you have to do when you take a trade is left click and drop it right on there. And then you can move it out of the way. It's that easy on Snagit. So you're not going to put it on your live charts. You're going to put it on the picture afterwards. While you're trading live, David, take that same checklist that now is HPTT. Take that same checklist, David, and just print it out. Put it on your desk. Have a pen or a pencil or a crayon or a marker or whatever you want to use. And when you're doing your analysis, remind yourself what it is that you're looking for. So you'll do that in the moment. And then afterwards, when you're going back and you're kind of checking yourself, am I doing it right? Did I see what I thought I saw? Then you can put that checklist on there and kind of do that second level policing. Does that make sense? Cool. Guys, allow yourself a minimum of 30 to 90 days to practice the mechanical approach, right? That mechanical approach. Focus on your entries. Start studying how you can manage your trades better. And then here's the part. If you're brand new, you've heard a lot of people talk about Apex. How do I do Apex? Guys, Apex is a prop firm, and basically what it is when you have your plan, right? When you've written down, this is what it takes to get me in a trade. This is how I'm going to manage it. I've been practicing it. I'm comfortable with it. I have my best looks. I know what I'm going to do. And you say, I'm ready to go trade live money. I'm ready to put a little bit of risk in the market. Apex will allow you to do what they call a combine. They're going to give you a NinjaTrader license, right? They're going to give you data, and they're going to allow you to test your plan for anywhere between $80 and $300 a month, depending on the size of the contract or the size of the account. The same way you cancel it, Thala, as you would on NinjaTrader, hit the red X. You're absolutely right, Matt. Large triggers are starting to move above, aren't they? What do you notice up top? So Thala, what you can do too is you can right-click, cancel all orders. And then if that doesn't work for some reason, you can also, if I have an order waiting, I can just X out. And it'll take it off. Absolutely, Matt. Well, if you closed it, then it's gone, right? Well, it could, but we just don't have a clear path, right? And that's all this is we don't have that clear path yet. Let's get the small triggers above it because we've been in a big downtrend. We're coming from a bad bottom. We're directly into resistance, and I've had one divergence so far. And you can see how it plays out. And Matt, I'm not going to lie. Successful traders they're not in the market all day long. Most next-gen traders that are trading will tell you that they probably take between 5 and 10 trades a day. That's it. Because they're waiting for the advantages, right? And it's, John always says, I got to stop saying John always says, but he tells some good stories sometimes. He goes, equate your trading to Elon Musk telling you, this is what I need you to do. I need you to sit in a room for 5, 7, 8 hours every day. And about every hour to 2 hours, I'm going to need you to click on a chart and do something. And then when that's done, I need you to sit still for another couple hours. And I'll pay you $1 million to do it. Most people would say, absolutely, I'd take that job. Most people, when they're 100% in control and they're working for themselves and not someone else, can't necessarily sit on their hands that long. They start to get bored. So get distractions, but waiting for advantages. So where are we now? We're at a termination. If the smalls get above, we'll look for one of those 50-50 opportunities, Matt, and we'll see if it happens. And then here, let's see where we're at. See how we lost momentum? We gave away the advantage of momentum. It's not odds favorable. The market pulls all the way to the mid-band. Oh my gosh, this is every lesson that we've talked about, guys, in one picture. Anything can happen, triggers. There's a divergence with the trigger lines inside. Loss of momentum on both charts. Market pulls all the way back to a mid-band. Large triggers are a full bar away. Not taking this short because it typically gets run over on the way up. How's that, guys? That's every lesson that we've talked about. Odds favorable, no termination conditions, market continues up, loss of momentum, divergence, anything can happen triggers, market pushes down, mid-band is reached, large triggers don't follow, price closes the gap to the large triggers. Guys, look at that mid-band inside of favorable large triggers. If you took that short, you got run over. Patterns repeat. And now we're just looking to see how that market shakes out. Pretty cool, right? All you have to do is practice. And then David, were you with us for the gap theory? When those large triggers are a full bar away. Here's exhibit A. David, I'm sorry you took a loser. Why you took this, you don't know? Not a good top, is it? David, good tops come from termination conditions. This is a bad top. Paul, I use Nexgen software. Show me a picture of yours. And we'll see if I can have an idea. David, what happened is you took a trade when the mid-band was reached and the large triggers didn't follow. Price closed the gap, and it just got you. And Paul, this is crude, so my indicators might not match yours because we're looking at crude. And then here's my S&P, starting to break above, right, Matt? 50-50, area has the potential to break, but it hasn't broken. You don't have... So Paul, how long have you had this workstation? You're thinking of buying on the next divergence? Are you saying, Matt, that if you get a reversal bar and a pullback to an area inside of favorable large triggers, you're willing to take a long trade with this look? I like the way you're thinking. Takes a little patience, doesn't it? But it works. So Paul, couple things. You've had it for a week. DHL, there is no replay on Apex. It's a NinjaTrader. Replay happens on NinjaTrader, David. Hold on, I'm gonna give you it. Okay, so you're using Ninja 7? Okay. Sorry, let me open up my tutorial section real quick. Give me 1 second. That's okay, David, I got you. Oops, wrong one. All right, so here we go right here. You've tried following the instructions, but nothing happens. The charts don't move. All right, so 7 or 8, David. And then Paul, if you're on 7, on 8, okay. If you're on 7, Paul, a couple things that you can do. You can start fresh. That's always one way to do it. But one thing that tends to help a little bit to get things where they need to be, the first thing is, are you doing every day? Are you getting rid of your cache, your tick, you're cleaning out, you're getting that fresh data, all that good stuff? So that's the first step, is you got to start doing that. You got to give yourself the opportunity to get your computer all set up for high. It's deleting the cache and tick every day. So every day, Paul, what I do, I'll just show you on mine. And then Dave, your quickest path to getting this done, who are you working with on sales? Is it Mark Dean? So one thing you can do is Mark Dean can help you for sure. And then really you can go to Discord and you can have Jason and Tech help you as well. He'll get you where you need to be. But Paul, every morning, database, cache, and tick, you need to clear these out. So go in after you're done today and get rid of cache and tick, and I'll give you the picture for it. And I'm going to try and help you too, Dave. We're running over a little bit, but that's okay. So Paul, every morning do that. Let me give you the picture so it's easy. And then what I want you to do this afternoon, you have to disconnect to do it. Is disconnect from your live data, Paul. Make sure that it says do not merge under options. Here's the picture for it. And repair the database and reset the database. Go through that, come in tomorrow, and it's probably going to put you in a pretty good position when you come in. And then, of course, if we get there tomorrow and you're on 7 and it's not lining up with mine, then we'll get you with tech. But that's the place to start. That's the easy fix on the beginning. And that really tends to help a lot of people. I'm sorry, you said 7. So if you're trying to use 8, let's do it this way, Paul. This will be the easiest way for you to do it. Go to the resources, download the indicators, get the new workspaces, and then start from there. Start fresh. Let them come through and rewrite it. And then if you're using 8 from the user guide, make sure that you're doing everything you're supposed to do to keep it stable. John Novak made a great video, how to clean it out, how to do everything. But Paul, your first step is going to be just read down, start fresh. And this is something that you can do that it'll take you a couple minutes. And if you need help, get with Jason and Tech, he'll help you out. David, if your charts aren't moving, you have to make sure that you're connected to the playback. If you're not connected to the playback, it's not going to move. Well, remember too that it starts at midnight. So if you're on 1 speed and it's midnight, it might take an hour for 1 bar to form. So fast forward a little bit and see if that helps. Make sure that your dates are lined up. So when you open the workspace, you open the E-mini 2023. Should be, Paul. But just start with fresh workspaces. Let that be the first thing that you do. Guys, that's always the easiest way is, hey, what's up, Elvis? If you're not getting everything the way you want it to do, just start fresh, right? It's like putting a known good component. If you think your alternator's broken and you put a brand new fresh alternator, well, you're going to know for sure in just a minute, right? And those new workspaces, that fresh workspace, going through, doing all that, really kind of gets you set up for success. Dave, some common things. Make sure that you're connected. Make sure that the dates are right. Make sure that it's just not a really slow midnight. If you try to market replay a Sunday in the S&P, it's not going to do anything. So make sure that your dates are solid. And then again, latch on to Jason in Tech And he can walk you through that process and make sure that everything is good and where it needs to be. Absolutely, Matt. Have a great afternoon. And guys, on that note, and Dave, I'm sorry, but it means that I have to, yeah, Jason, it is. Let him do it. If we don't go to Jason every now and then, he doesn't have job security. His wife gets mad. Safia, no trades today? Or no trades that you wanted to share? Having issues with NinjaTrader. I'm sorry. And then John just posted right there. See if he can help you out. I'll tell you what. I've run pretty flawless on 8, following that path that John put in, how not to crash. And then one of the biggest things that I do that seems to help me is I'm not drawing on NinjaTrader 8. I'm taking pictures and drawing, and that tends to help quite a bit. We went flawless all day in class. Scrolling through, doing on that. Nice, Gary. Yeah, Elvis, I'm the same. If every trade you take is bad, are you following the rules on every trade, Safia? That's what I always ask. If every trade is bad, are you following it? Well, that's okay. I'm trying to be 6'2" and better looking, but I'm not. So, I mean, trying is great, but if you're struggling, post them in the room, Safia. Let me help. That's the one thing you're not doing. Oh, you're trying to get used to Ninja. You're doing it on simulator, right? Practicing on simulator? Cool. Then keep practicing, and you can post questions in here if you have them too. I'll always do my best to help you guys. I always will. I found that once I got comfortable with it, I love NinjaTrader 8. I love the way it looks. I enjoy it. I think it's a great platform. It just takes a little bit. So, guys, that's it for me today. Thank you for being here. Had a good crowd, a lot of great questions, tons of pictures. Man, I needed the coffee today, Thala. I'm on a 4.5-hour nap this morning, so. I will be back tomorrow at 9 a.m. We're going to do it again, guys. We're going to do this every day until you get to where you want to be. That's the plan. Go trade, look for advantages, do what you got to do, and I will see you guys tomorrow morning, 9 a.m. We'll do it again. You can call me Marl, Safia, but you're the only one. Great job today, everybody. I'll see you in the morning. You guys take care. Be good.